Good morning. When's the Pow Pow speech? 11. All right. Let's go. SPX opened up here. Jamie looks kind of interesting. QQQ. Take a look at that. All right. All things down in the pre-market. Ding ding. Thanks, Carl. Great. I have a meeting at 11:30. So don't fuck with it. Right? Good morning, Johan. Fill the gap in 5 minutes. We'll see. When's our PMI data coming out? It's going to be at 9:45 and 10. Then I got Goolsby speaking at 10 also. And then Powell at 11. The support call starting in 30 minutes. All right, no worries, man. Probably gonna miss the whole thing. Have fun, everybody. At least thanks for letting us know that the market's gonna crash. Greg, so far I'm up 15% on my port. I want to thank you again. Finding you in Spring 21 was really the best thing. You're the best. Thank you so much, DZ. I appreciate it, man. Greg, I had a dream. I started working on Wall Street and everyone traded FX, and then a guy in a gold cart told me to go home. You really gotta lay off the crack during the early part of the week, you know. That's more of a weekend endeavor. Fed calendar has two items on it. Flat Gang. We have Goolsby and J-Pow, I think. Call Doug at BlackRock and tell him to buy my top CSPs. Hmm. Yeah, maybe not. Oof. Ball's getting crushed. Still a little bit of shorts left. December 8th, 43.50 call on TQQ. Good hedge. Can't buy 0 DT on TQQQ with Fidelity. 50. Could be, yeah. Yeah, that doesn't seem too bad. Why does the Fed have a calendar? Well, because they do things on a schedule. Take a shout out for my birthday. Happy birthday, Nedog. How you doing, man? Win VIX 8. Not yet. Decent volume so far. Oh, priced up. Does the Fed have Volmageddon 2 on the calendar? I should check. Happy birthday to you too, Dallas B. A lot of drag down at 50 and 45, huh? Have you considered posting the daily on Twitter? I thought I did. Doesn't it automatically post there? Oh, that's weird. Yeah, I didn't know that. Hold on. I probably could. Come on, Wall Street bets. You can do it. Potential low if JPOW's hawkish. 45.25 or 45.15, I think. Depends on how hawkish he is. Greg, I've had nightmares since you posted that video of you warbling like a bird. You're really tall and lanky. That's Venus. Venus is epic. Did you know that J Roll changed his name to Phil My Anus? I'd believe it. Like as a thread, not a Reddit link. Oh, no. No, I haven't. I suppose I could. I keep it on Reddit because that's where most of the GME people are, and despite their dislike of me, they still read it. Breaking 15, a huge deal for GME. Ideally, it gets some support from indexes. Got big open interest 16, 16.50, 17. A little bit at 18. 17.50 to 18 might be a little difficult. Still a lot of sold calls at 15 though. Ooh, we're gonna get a crossover. The time the time for calls was when we were breaking 15, but all right. On my birthday, can I time out 10 people? Secret time? They're all popcorn trader. Ask popcorn trader. I'm sure he won't mind. It's rude. Are my 1650 CC safe? JK, love you, Gerg. Um, no problem, man. It's up adopted. Wow, I just sold my calls. Well, on Jammy? Not even gonna not even gonna give T plus two a chance. All right, we got PMI coming out in 1 minute. Manufacturing PMI. Bub, bub, bub. Looks like it came in at expectations, down slightly. So a little bit of contraction in the manufacturing sector. It rolled back and down to 1350. Okay. Slept in. Did I miss the market crash? Made 130% on some GME calls. The rest can ride. Yeah, I hear you. Just lurking is normal. Granted, it's Friday, but I don't feel like playing zero DTs. Is that weird? Not really. Fidelity Crypto Bros telling me Caspa thing is the next Bitcoin. What do? I don't know. Sounds like a shit coin. McLovely Tradbs. What's the upside range for Jamie today, tomorrow? Gamma Max is at 1647. It's starting to break away from 15. Getting up above 1550 would be really good. But we're not quite there yet. Gamma Max at 16. What was it? 16 fucking something? 1664 gives a potential upside range of like 1913. But Gamma Max could shift if the short calls that expire today capitulate, which I don't think they've done yet. Yeah, Upstart's moving a little bit. Memes like to run on Fridays because everyone's got zero DTs, so they're cheap. GME GM 1664, your DD is right. Yes. About my 15s at 50% profit, doing my part. Well done. Should I GME call a zero DTE for old time's sake? You were doing so good staying the fuck away from it. Is IV going up on GME? Yeah. People are buying options. We got like within the next $3 range, there's 15, 20, 27,000 OI, 28,000 OI. I'm getting FOMO. I just want to say I was here. I understand. Ooh, 1550 is a big deal. Volume's declining a little bit, but maybe we get a breakout here. I think that pays for the whole position. The rest can just run. I did it. I bought a single $16 call. All right. I took my 500% on Jamie Wednesday. Learned not to jump back in. Glad everyone else is making more money. I mean, I'm just buying the T plus two, right? That seems to make sense. Tuesday, expected dip Wednesday, Thursday, everyone will sell, and then people get sad, and then FOMO and Friday. You're 100% a hedgy to know this. I don't know if anybody has researched GME runs more than me, man. Maybe Kenny. New yearly high on some uranium names. Very impressive, my man. Yeah, uranium's been doing well. Asroff at $10 was a great pickles pick. What are we feeling about JPOW speech? Seems like no one knows what this subject will be. Seems a perfect opportunity for him to announce he's opening a wholesale carpet, rug, and flooring store today. I mean, we might know in advance if he's going to comment on monetary policy. I don't know if they're going to release the speech ahead of time or not, but they could. Are we filling the gap? We're trying to. Would you say the river is overflowing or dry? I think Jamie tips probably have crossed. They have. This is very bullish. Borrow rate still rising. Jimmy could potentially make a new high. Yeah. 16's really important. We broke 1550. So that should give us a little bit of gas. Um but we might need indexes to push 16 just because of short calls. Upstart going to 30, maybe. Yeah, it's up 5% now. It's getting the push it needed yesterday. Upstart's also crossing over. So that could be fun. Could this be all gas, no brakes? Maybe. Volume's increasing. The hedging demand is bigger above 16, though. Upstart going to 30. How high would Jamie have to close to get another T2 bump from today? There isn't always one. Like, if GME tests above Gamma Max today, it can just rug. Like it won't have like continued supportive flows, so it's really unlikely that it would be above like 16 into next week. This is extreme, but if Jamie were to break above 1877, it definitely would come down next week because the charm's gonna collapse. So we think about IMPP. I got some Jan 19 $2 calls on it. It's a petroleum shipping stock. Is 18 still the target today? Or did yesterday mess that up and now it's roughly GM? It's always GM plus or minus 10%. So the expansion, like the expansion of gamma, and not only into expiration but above gamma max, can lead to speed picking up, which can drive prices higher than gamma max for a period of time, but a very short period of time. Do you think it's better for GME not to go up too much today? I mean, no, it's not better because I mean, even if it doesn't, there's if it doesn't go up, then there's nothing to carry over. So you want it to go up and blow out the top, and then it's done, right? JPOW's at 11. How's top looking? Well, it's down 0.29. Like I said, it looks like they're trying to avoid covering there today, but I will say that they haven't got as big of a liquidity bump today, but volume's really low. Ooh, rejected. Sixteen's gonna be a big deal. Profit taking. Ooh, breakout on SPX. Triggered my TS and immediately turned around. What, Jamie? Yeah, you gotta be careful using trail stops on GME runs. They usually get blown up. NQ doing violent moves. Fubo's no slouch today either. Oh yeah, nice. It's not going crazy or anything, but it's doing alright. I might sell some more $3 calls on it today. ISM. Ooh, big contraction in ISM. I love how the market's fucking ripping on the manufacturing sector contracting. And yet we had 5% GDP growth. What the fuck? Yeah. Bullish data, Kirk. It doesn't make any sense. I mean, it's whatever, but one step closer to a recession. Time for SPX 4600. What are you looking at to decide whether or not to sell more $3 CCs on Fubo today? The number of shares of Fubo that I haven't sold CCs on yet, mostly. Gap filled on the contracts. A lot of paper hands. Jesus. Shaking them out. Jimmy gonna recover here? Or you think Freg is upon us? It depends on how many more zero DTEs sell off. Let's say the downside's losing a bit of volume. Yeah, IV's not falling. Kingston can't catch a break, huh? Do you remember if end of GME might pump due to almost free zero DTE calls. What? What about Upstart? Let's try it. Nvidia's still down today. Microsoft, Meta. Uh, let's see if people buy the dip. Nice, greedy dead man. So part of this is, paper hands. Part of it's also, the market maker hedging against like the pile of calls at 16. Um, so usually when you hit like a big call wall like that, you run into some resistance. As long as it doesn't pull back too much and we regain 1550, we should pick our momentum back up. And now with like a much higher likelihood of breaking out above. How far out do you go with Fubo CCs? I've been selling them. The ones I've been selling recently, I've been selling out in Jan. But I'll also just like I don't really care about the expiration. I just care about the delta. Like if it drops below 3, I just close them. So do you remember if traditionally the end of day today, Jimmy might pump into the run due to very cheap zero DTE calls? I mean, we're kind of already getting that. Are you rolling your December 15 Airbnb spreads today to Jan? Not to Jan, but to end of December? I might have already gotten stopped out of them. I'm gonna have to check. That was a big move. Um, yeah, it looks like I got stopped out of them, but I'm gonna reopen them. I'm thinking there'll be an end of year sector rotation out of tech into small mid caps, taking year to date profits, rolling them into 1 to 4 baggers for next year. You're probably not wrong. Like, well, industrials, manufacturing, utilities, not necessarily just small caps, but small caps will benefit most from that rotation. I think we're already starting to see a little bit of that. Or we saw a little bit yesterday. What's Upstart's GM? Like 32 or something. It's in the daily. 29.89. Sorry. Looks like it came down, which is kind of bullish. Oh, man, I'm starting to get more aggressive selling CCs. Glad I've started listening to you. Learned I know need to diamond hand options. I don't need to diamond hand options. That's a good lesson. Upstart back to 70 fast. That's a bit of a reach. Remind me why GM coming down is generally bullish. Concentration of interest on the call side of the money. So gamma near the money is picking up, which is usually bullish. We go from left to right over the charts. What are you looking for? What? Super going to be profitable soon. It's cheaper than a gallon of gas. We're supposed to be profitable by the end of was it 2024? They're looking for positive adjusted EBITDA by the end of 2024. Uber might be cheap, but it's also wildly consistent in its price movements. I've made I've made far more money than I've invested into it over the last like 3 months just selling covered calls. No problem, Spider. I recognized you from the photo, but your name was different. With your cursor from left to right? I don't fucking know. Different stuff? They're synced too, right? So sometimes it's just comparative. Like I'm just looking at like price in relation to other things over the time frame, right? Or I'm looking at like closing candle price minute over minute. There could be a lot of things. Volume sometimes. Two girls, one cup. He mostly does it to look smart. No worries, man. It's good seeing you. In a fight between Spider-Man and Spider-Man, who do you think would win? I don't. You're Spider-Man. I feel like you'd have a better answer than me. Do you think you could take on Spider-Man? What's the difference in selling Phobos? That guy clearly doesn't understand that TA is a form of wizardry that can't be taught. What's the difference in selling Fubo CC early Jan versus late Jan? If I just end up selling Delta and closing early, you'll be more profitable with so the shorter time frame you sell it on, the more near term profitability you'll have. If you sell it on a longer time frame, then you're gonna want to wait for like more theta to decay before you close it, right? Jimmy's doing pretty well given that the market's falling off a cliff after it tested 45.75. Is it bad to be flagged as a day trader? Not if you already have 25K. It just doesn't matter. Those are just rules for poor people. Stopped out of your call? No. I mean, I've stopped out of a few. I've taken profits because, why not? But I'm not out of all of them. How did Upstart? It looks like Upstart held up against the drop really well. That's kind of bullish as fuck. Yeah, no pullback on Upstart at all there. Nice. What a tank. We're American. As a Canadian, I've never had to worry about PDT/GFE. Yeah, but you also have to pay like $10 a contract and you can't sell puts. So, win some, lose some. I was planning on cutting these GME calls at open, slept in by accident. Guaranteed profit. Out of curiosity, is swing trading shares ever relevant or no point if you have access to options? It can be. I mean, if you have a really long time frame for a trade, it can sometimes be advantageous to swing shares. Also margin, right? I mean, you can get a lot of leverage with margin. So it's always an option, but I prefer options to shares. It's much easier to scale in and out of a share position than an options position. They generally require a lot less management. They tend to be a little bit more easy mode. There's nothing wrong with it. It's just not really my thing. I spent a good chunk of time trading shares and just felt like it wasn't worthwhile when I could get leverage at a quarter of the price or cheaper. Is there an optimal way to take profit here with shares? I mean, you can scale out of them. That's usually the most optimal way to take profit, is a little bit at a time, as you see if you can confirm higher highs or not. I like the struggle. There's still more covering that needs to be done, though. $1 to $2 commissions on IBKR. If you're with big banks brokerage, then 10. Yeah. So also, yeah, no sold puts and retirement accounts. Yeah, that kind of sucks. Especially given that's such a great way to manage retirement accounts, right? Just like DCAing with CSPs. Any good chance Jimmy will trade with single digits by the end of the year? The end of 2023? That's unlikely. 2024, maybe. Lower lows and lower highs. That's the way short vol rolls. Maybe everybody will start un-DRSing when they get disappointed, and then we can have higher lows again. Is JPO selling textbooks today or talking about monetary policies? Good question. I don't think anyone knows. I'll say that if he doesn't comment on monetary policy, things could get a bit more bearish, but we'll probably stay in like the 45, 50 to 40 range, but it could be a lot more bearish. First off, we'll probably get a big dump of out of the money call interest, because there's quite a lot of it that's way out of the money. Just joined. Are you gonna roll Airbnb? I got stopped out of my Airbnb this morning, but I'm gonna re-enter it. If you have shares and buy a put and then exercise that put, let's sell your shares out of your account at the strike price. Yeah, you put your shares onto the purchaser, or on the seller at the strike. That's a protective put. It's an economic roundtable at Spillman College. It's gonna be a nothing burger. It, all that matters is if he comments on monetary policy or not. And I don't think it's a round table. It's like a sit down with the governor or some shit of the college. I think it's a conversation with Spellman College president Helena Gale. So it's kind of like an interview, just like the economic forum interviews. It could be relevant. It could be very relevant. Especially like if there's any Q&A involved, it immediately creates relevancy, right? And if he has opening speeches that deal with monetary policy, that can as well. Is Upstart topping out? Well, it's getting pretty close to Gamma Max. It may not be topping out. It may. Hard to say. There's a good chance like not a lot happens today, and then until the Powell speech, right? Things just get kind of bogged down till then. Like we're past the PMI data, and that's what drove most of this morning's price action. So he's gonna announce 12 rate cuts next year. Yeah, that shit's ridiculous. I saw that article. Even fund futures, I think, are overly optimistic. And here's the thing that I really don't understand about like the bull case there is the Fed is going to cut rates because make money. But there's no, like, they haven't filled in the blank. If the economy is strong, despite the federal funds rate, why would we lower interest rates, right? Like, that doesn't make any fucking sense. But apparently we're going to, just for no reason. No, the Fed will cut rates because we want them to. No, they won't. Like they're not gonna move to QE. If we don't get a crash, right? Or a credit crisis, the Fed's not gonna do shit. That's why I made that meme the other night where like the headline keeps changing, but Powell just keeps the rate the same. Because that's the nightmare for the bulls right now. Yeah, Microsoft's been getting slammed pretty hard. I got a few credit spreads out on it, but not any debit spreads. I have longer dated puts on Microsoft, like leaps, but I haven't picked up any for like the local position. I think I'd still want to wait till after Powell speaks. HashiCorp? I haven't looked at that in a long time. They've been fucking up their business model a bit. I'm not a big fan anymore. Just got an ad for CBOE ad for SPXS. Is this a sign of the market dying? No. The Fed will cut because current rates are intended to be restrictive. They don't intend for those levels to be status quo long term, but there's no reason to cut restrictive rates. Inflation's not at 2%. Inflation's not going to be at 2% for a long time, right? They are intended to be restrictive until inflation is back at 2%. Also, rates just became restrictive in the middle of this year. You're forgetting the effect of inflation against the federal funds rate. Right now, the effective federal funds rate is only 2%. The Fed never cuts rates until there's a crash or a credit event. Everyone always this happens every fucking time. Everyone gets all bullish. Like this happened during the dot-com bubble, like on three separate occasions. Everyone got all bullish. Everything was gonna get better. It was a new normal, and then nothing happened. They always over tighten. It's part of the bluntness of the tools they have available to them. I don't think we're ever going back to 2%. Possibly not. There's sticky effects, right? And not only do you have sticky effects of inflation, you know, there's like the rationality thesis, right? And the individuals and corporations will behave in a rational manner with the expectation of inflations and move ahead of inflation with pricing, right? It takes a very, very, very long time for some things to come down. Um, some things never come down. This is why you get, a consistent increase in price over a long period. One of the reasons you get a consistent increase in prices over a long period of time. Fool me once, shame on you. Fool me twice, shame on me. Fool me 3 times, shame on both of you. Are you entering anything or just waiting for JPAL? I mean, I have a couple positions, but I'm mostly waiting on JPAD. Tasty Theta, nom nom nom. Welcome to Dillionaire. Thank you so much, man. I appreciate it. Hit me up on the Discord. I'll get you added after the stream. I agree with you. I'm very positioned for contraction, but the bull case can fill in the blank. It's not realistic though, right? Like none of the data supports it. None of the prior evidence of Fed action supports it. And not only that, we have yet to really feel the effects of the tightening cycle, right? I mean, those are extremely lagged, and even more so because of the fiscal impulse. So it's like that's still gonna be something that's realized. And we've got what 18% of the commercial real estate market refinancing in the first half of 2024. We've got a significant chunk of the S&P 500 and then the Russell 1000 refinancing debt in 2024. All of that's going to be refinanced at higher rates. Some of those companies are not going to survive that refinancing. Probably a lot of those companies aren't going to survive that refinancing, right? So, I mean, sure, they have a case for rate cuts, but that doesn't mean the effects of real rates are going to be unfelt, right? The economy is going to have to absorb those effects. Someone's going to have to eat the shit sandwich. And right now it's the consumer eating the shit sandwich, but the consumer can only eat the shit sandwich for so long before corporations have to. Everything, even mega cap tech and its monopolies and its tons of free cash is still subject to economic contraction. They cannot maintain the levels of profitability that they currently have if consumers are buying less and then small businesses are buying less and mid caps are buying less. Those are their customers, right? And small businesses, I posted some data on small businesses the other night in the SBA October release, and small businesses are not doing well. Their access to credit is restricted. Their potential growth and earnings expectations are down, and they employ 47% of the people in this country. That's 47% of people that could be making a lot less money in the near future and buying a lot less shit. And if people are not buying less, corporations are going to have, they're going to reduce capex. They're going to reduce their spend on software as a service. And all of a sudden, that moat surrounding big tech starts to dry up. The biggest problem with that is there's so much there's such a strong belief that they are defensive, and they're not. They're just affected last, right? They're highest in the food chain. But it's just like any other, hmm, let me think of a better way to put this. You know how like all the controversy surrounding like killing mosquitoes with genetic modification, because then the bats won't eat, and then the things that eat the bats won't eat. It's like that, right? Like you can push a lot off onto the poors and onto small businesses, but eventually it feeds back. Anecdotally, corporate bankruptcies are already climbing. The bats are dying. Yep. And think about that. Those are the people that are using AWS cloud services. They're the ones paying for year-over-year Microsoft licensing. They're the ones, buying chips, buying GPUs. They're the ones, uh, they're the ones, using Salesforce, using Shopify, using CrowdStrike, right? And that's gonna feed back, right? And their employees are the ones buying Apple phones and Teslas and and shopping on Amazon instead of going to a local store. And those employees start to lose their jobs. Biomagnification in the market, kind of, yeah. So I think a lot is just swept under the rug in order. I mean, you have to remember, like, analysts and the market's expectations are rarely realistic, and analysts are just salespeople, right? Their job is to ensure that shares of something are trading, right? They don't really care about anything else. They make money if you buy stock, right? Fucking you buy 10,000 shares of the stock. They're gonna make a cut or a point on every share you buy, right? They don't care if you make money on the stock, you lose money on the stock. It's irrelevant to them. Probably isn't a salesman. Don't you dare call him a stock god. He's promised SPX 4500 or 4800 and 4500 or 5000 since. He's promised SPX 5000 since 2021. He's promised Bitcoin 100K since 2020. Jamie Dimon fired him for a reason. Speaking of GPUs, someone on Twitter drove into NVIDIA's Taiwan sales. Drove into NVIDIA's Taiwan sales and is theorizing oh god, I hate it's super clickbaity, but I've seen it. Theorizing that they're using the front to subvert the China ban. Yeah, no shit. Of course they're subverting the China ban. The China ban should have knocked $7 billion off of their sales over the course of this year. And their fucking revenues are still going up. They're not doing that without the help of the second largest economy in the world. I have a straddle still from last night. Bar rate 8.9% means they're shorting real shares on GME. Yep. Thanks, Jamie Diamond Hands. I appreciate it, man. I'm glad. So many big banks' chief strategists are forecasting SPX 5000 in 2024. exit liquidity much. I mean, fucking banks did this literally all the way until the market was crashing during the GFC, right? Even when the market was already crashing, they were still like, "Ah, oh, this is just a pullback. Don't worry about it. It's totally fucking okay. We're gonna get all this sorted out. These banks' failures aren't gonna be a big deal." Some of you were there for it. You remember. It's like in fucking end of July when all the analysts were like, "Oh, this is a healthy pullback," and then we fucking dropped 10% over the next 2 months. I can't believe I'm gonna say this, but GME Weeklies saved my port. That's really awesome, but also kind of sad. I thought you only bought 116, Cobra. No, Jimmy doesn't really look bearish yet. It's in a descending wedge. But we may not see a lot of price action until after JPOW. JPOW's in 17 minutes. Have you looked at Ulta? Yeah, I saw the earnings pump. They said AI a bunch in their earnings call too. Seems unsustainable. I don't know if I'd short beauty products. Are we seeing actual distribution on Mag 7 stocks? Sure looks like it. Are you still in top? No. Oh, I caught it. Although I will say it's looking a little bit better today. I might re-enter. But I might wait for Powell to do it. I told my wife I would short Ulta. She's still laughing. That's because you don't know how much of your money she spends there. I went to an Ulta to get like face wash the other day, and like the 3 women in line in front of me each spent like $300 on like a fucking like a little bag of shit like this big. The snake oil game is real. Korean face creams? They have ruined my wallet. Don't remember who it was, but I got an interview printed in my head of some guy talking about a healthy pullback. And this is fine as market was free falling after the banks collapsed. Yeah. Replace snake with essential and nothing has changed. Yeah. 300 is like 6 things at Ulta. Yeah. Yeah. Just like a few items. The profit margins in beauty products are massive. Yep. He says as he also stands in the checkout line. I mean, I didn't spend $300, but I'm also not shorting them. I don't spend that much on drugs. This one girl I was going out with spent like $500 a week on CBD shit. Literally just fucking hemp oil. CBD, speaking of snake oil, yeah. SPX position to maintain range again. I know JPass weeks today, but does this positioning reflect that? Yeah, I think we're mostly in the range where we're stable amongst all of the neutral positioning, of which there is a shitload. Actually, upside positioning has trimmed since this morning quite a bit. And the positioning up to 4,600 is weakened. There's some really cheap exposure out here. Hmm. Oh, Jamie still seems kind of fine to me. We're still above 15. There's still plenty of OI like open interest on the chain. So I mean it can run. Turning up the bar rate and shorting into JPAS speech is fine. I mean, if you obviously if you had calls earlier, taking profits was the right choice, but it can still move again. Far out of I wouldn't go too far out of the money. There's still a lot of defensive positioning below 45.50, and there's not a lot of liquidity above 45.75. The book glitched out, so we have 49,000 shares of TDSC and 45,000 shares of AGOX. Has this ever happened to you? No, I've never had my share count change. I haven't held shares in WeBull in a long time, but are we sure there's a policy hinting speech? No. As far as I know, no speech has been released in advance, but it is a discussion on. It is probably going to involve monetary policy and Q&A. So it's like a sit down discussion, like a one-on-one interview kind of situation. So what about Burke? Oof, nice. Well, that's paying off early. Maybe a bonds falling here ahead of JPOW. I don't think it matters. First of all, it's not really a very significant move. Maybe the 5 and 2 year, but with a 10, 20, 30 haven't moved very much. We're still significantly higher than yesterday's low. But whatever he says is definitely going to affect rates. Could be short covering on bonds in advance. CTA still have a big position. It's much smaller than it was, but it's still big. Does Upstart have more range if JPOW is dovish? Yeah, possibly. I mean, Upstart benefits from a dovish narrative. Does Jamie holding 15 matter at all going into next week? Probably not. Yeah, tips are still crossed. One day people will know the difference between bonds and yields when discussing prices. No problem, Mark. Do big boys just position for things like JPAD talking and know they're going to move it regardless of what he says? Like, what he says isn't important. They just use it to move the market. Well, yeah, because you get a influx of liquidity. Fixie calls are green. You're my hero. Don't worry, they'll be red again if he's hawkish. How does a mere mortal like me find out about which way CTs are positioned? Uh, hmm. Do you have access to a Bloomberg terminal? It's CTAs, not CTs. But no, more difficult. I usually whatever CTA reports or estimates I come across, I usually post in Billionaires. It's intermittent though, and I don't want to go to a Bloomberg terminal very often, nor do I want to pay for one ever. Ad for Fubo. I got the same ad buying calls. Fubo ad. Look at you guys. Since Mag 7 stocks are down today, do you think this reflects positioning to pump after Powell's 11 a.m. talk? Regardless of what he says. Actually, the upside call positioning broke down already this morning. So there's less liquidity on the upside now than there was at market open. I guess the bulls didn't like the PMI data, which makes sense. Yeah, Bloomberg terminal is like 25,000 a year. I have access to a couple. There's a few here in the city. I have one at my school, and then I think the public library has one, and I have a few friends that will look shit up if I ask them to. Although they usually bitch about it. Bloomberg News subscription is not the same as a Bloomberg terminal. Can you spot me 25K? I'm enrolled in a program that I've not continued. If someone figures out where those Bloomberg terminals are, they could camp out until you go there. And then what? Surprise me? What data does Bloomberg terminals have? Give you the trading view can't. A lot. Well, first of all, let's start with options and fixed income. Are you listening to Powell talk about Hispanic representation at the Fed or nah? I'm getting ready to, yeah. Oh, here we go.
Yes, Chairman Powell and members of the Federal Reserve Board, including our very own Lisa Cook, President of the Federal Reserve Bank of Atlanta, Raphael Bostic, and its members, Spelman Board of Trustee members, administrators, faculty, friends of the college, individuals from institutions throughout Georgia, and the remarkable community of Spelman, welcome. I am Marinette Holmes, Chair of the Department of Economics here at Spelman, and it is a privilege for my department to co-host this momentous occasion. Today marks a historic event in Spelman's 142-year history, the first visit by a Federal Reserve Board chairman. This is yes. Yes. This is a tremendous honor for our institution. Founded in 1881, Spelman has been training women to take leadership roles in all sectors of society. Our very founding was an investment in the potential of Black women and girls to use their education for the good of society. Today, we are very proud of the return on investment. Thousands of graduates represent the institution across this country in all areas, and given the occasion, we are especially proud of the impact Spelman women are having within the economic and financial sectors. Today's fireside chat between Federal Reserve Board Chairman Powell and Spelman's President, Dr. Gale, promises to be an insightful discussion on crucial topics such as the post-COVID economy. Under Chairman Powell's leadership, the Federal Reserve has placed a high value on diversity, recruiting a record number of women and persons of color, holding seats on the boards of the Federal Reserve banks, including the bank here in Atlanta. We are delighted to acknowledge the most diverse Board of Governors in the agency's 109-year history, including Spelman alumna Governor Lisa D. Cook. Yes. Yes, yes. And let's celebrate her for her achievements, and thank her, because the Economics Department currently houses the Lisa D. Cook Scholars, a scholar program designed to address the scarcity of Black women pursuing graduate degrees in economics. And I am now pleased to introduce one of those scholars, Lisa Williams, class of 2025 from Novi, Michigan, a junior economics major with a minor in management organization, who will introduce today's speaker. And once again, welcome to this historic event at Spelman College.
Good morning, everybody. Jerome H. Powell first took office
Yes, no
as
contract
chair of the
on
Board of Governors of
protesters.
the Federal Reserve System on February 5th, 2018.
Hopefully
He
campus
was then
security
reappointed
kept
to
them
office
off, right?
and sworn in for a second term on May 23rd, 2022. Chair Powell also serves as chairman of the Federal Open Market Committee, the system's principal monetary policy-making body. Chair Powell has served as a member of the Board of Governors since taking office in May 2012. He was later reappointed and sworn in during June 2014 for a term ending January 31st, 2028. Prior to his appointment to the board, Chair Powell was a visiting scholar at the Bipartisan Policy Center in Washington, D.C., where he focused on federal and state fiscal issues. From 1997 to 2005, Chair Powell was a partner at the Carlyle Group. He served as an assistant secretary of the U.S. Department of the Treasury under President George H.W. Bush, with responsibility for policy on financial institutions, the Treasury debt market, and other related areas. Prior to joining the Bush administration, Chairman Powell worked as a lawyer and an investment banker in New York City. In addition to service on corporate boards, he has served on the boards of charitable and educational institutions, including the Bentheim Center for Finance at Princeton University and the Nature Conservancy of Washington, D.C. and Maryland. Chairman Powell was born in February 1953 in Washington, D.C. He received a bachelor's in politics from Princeton University in 1975 and earned a law degree from Georgetown University in 1979. Helene D. Gale began serving as the 11th president of Spelman College on July 1st, 2022. President Gale previously served as both president and CEO of the Chicago Community Trust.
Why is
from
she
October
reading their
2017
Wikipedia
to June
entries?
2022. Under her leadership, the trust adopted a new strategic focus on closing the racial wealth gap in the Chicago region. For almost a decade, President Gale
mention his
served as both
pigeon whale
president and
status.
CEO of CARE, a leading international humanitarian organization. As a pediatrician and public health physician with expertise in economic development, humanitarian efforts, and health issues, she spent 20 years with the CDC, working primarily on HIV and AIDS. A previous member of the Federal Reserve of Chicago's board, President Gale currently serves on both public company and nonprofit boards, including the Coca-Cola Company, Organon, Palo Alto Networks, the Bill and Melinda Gates Foundation, Brookings Institution, New America, and the One Campaign. She is also an inaugural member of President Biden's Advisory Council on African Diaspora Engagement in the United States of America. President Gale is from Buffalo, New York. She earned a bachelor's in psychology at Barnard College, a doctor of medicine at the University of Pennsylvania, and a master's in public health at Johns Hopkins University. She is a full professor at Spelman College, a recipient of 18 honorary degrees, and also holds faculty appointments at the University of Washington and Emory University. Please join me in warmly welcoming Federal Reserve Board Chairman Jerome Powell to the stage as he offers his remarks, and afterward, we look forward to President Gale joining Chairman Powell for an engaging discussion on navigating pathways to economic mobility.
Thank you for that very kind introduction. Thank you, Dr. Holmes and President Gale, for inviting me here. It's very exciting to be here. And I'm fortunate to have been accompanied from Washington by a very distinguished graduate of Spelman College, class of 1986, and a member of Delta Sigma Theta. My Federal Reserve colleague, Governor Lisa Cook. I'd say there's no greater testament to Spelman's historic legacy than the achievements of outstanding women like Governor Cook. One part of that legacy is Spelman's tradition of promoting education in STEM. Governor Cook's research highlights the key role of such education in preparing individuals to be inventors and innovators who can generate ideas that will add to our body of knowledge, increase productivity, and generate higher living standards over time. Her work is just one example of how Spelman women continue to make historic contributions in science, the arts, technology, medicine, and other fields. I look forward to our conversation, and I thought I might frame it up first by talking about the Federal Reserve's ongoing actions to promote a healthy economy and how those actions relate to questions that students in this audience might be asking about the future. For example, I imagine students are wondering what kind of job market and what kind of economy you'll be entering when you complete your education. To start, Congress assigned the Fed the dual mandate goals of maximum employment and price stability, and both of these goals are essential aspects of a healthy economy. Congress also gave the Fed a precious grant of independence from direct political control to allow us to pursue those goals without consideration of political matters. Other major central banks in democratic societies around the world have similar grants of independence, and this institutional arrangement has a strong track record of producing better policy outcomes for the benefit of the public. So let me go to the two dual mandate goals, and I'll start with maximum employment. I'm glad to say that by many measures, the conditions in the labor market today are very strong. A couple of years ago, if you go back, the pandemic was receding and the economy was reopening. The number of job openings grew to greatly exceed the supply of people who were available to work, leaving there a widespread shortage of workers. Today, labor conditions remain very strong, and the economy is returning to better balance between demand and supply for workers. The pace at which the economy is creating new jobs remains strong and has been slowing toward a more sustainable level. That gradual slowing has come in part due to the efforts of the Fed to slow the growth of the economy to help reduce high inflation. After declining sharply during the pandemic, the supply of workers has bounced back as people have come back into the labor force and as immigration has returned to pre-pandemic levels. Partly because of that labor force growth, the unemployment rate has edged up over the second half of the year, although it remains historically low at 3.9%. The increase in labor force participation has been particularly strong among women in the prime working years of ages 25 to 54, which surged to an all-time high earlier this year and which remains high and above pre-pandemic levels. Wage growth remains high, but has been gradually moving toward levels that would be more consistent with 2% inflation over time. So real, which is to say inflation-adjusted wages, wages after inflation, are also growing again as inflation declines. Turning to price stability then, the second part of the mandate, we have a longer run goal of 2% inflation, and after running below 2% for over a decade, inflation increased sharply in 2021 in the United States and in many other countries around the world. High inflation imposes a significant hardship on all households and is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Beginning in early 2022, we reacted forcefully, raising our policy interest rate and decreasing the size of our balance sheet to help slow the economy and bring down inflation. And inflation has now declined to 3% over the 12 months ending in October. But if you factor out energy and food prices, which tend to be volatile, you get what's called core inflation, and we look at that too. That is still on a 12-month basis 3.5%, well above our 2% objective. However, over the 6 months, now looking at more recent data, the 6 months ending in October, core inflation is actually running at about 2.5%. And while these lower inflation readings of the past few months are welcome, they're highly welcome, that progress is going to need to continue if we are to reach our 2% objective. The high inflation that we got beginning in 21 initially emerged from a collision between very strong demand and pandemic-constrained supply. And the normalization of supply and demand conditions that we've seen has played a critical role in the disinflation, the coming down of inflation so far, as has the substantial tightening of monetary policy and overall financial conditions over the past 2 years. The strong actions that we've taken have moved our policy rate up and well into restrictive territory, by which we mean that tight monetary policy is putting downward pressure on economic activity and inflation. Monetary policy is thought to affect economic conditions with a lag, and the full effects of our tightening likely have not yet been felt. The forcefulness of our response to inflation also helped maintain the Fed's hard-won credibility, ensuring that the public's expectations of future inflation remain well anchored. Having come so far and so quickly, the FOMC is moving carefully forward as the risks of under and over tightening are becoming more balanced. As the demand and supply-related effects of the pandemic continue to unwind, uncertainty about the outlook for the economy is unusually elevated. Like most forecasters, my colleagues and I anticipate that growth in spending and output will slow over the next year as the effects of the pandemic and the reopening fade and as restrictive monetary policy weighs on aggregate demand. The FOMC is strongly committed to bringing inflation down to 2% over time and to keeping policy restrictive until we are confident that inflation is on a path to that objective. It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease. We are prepared to tighten policy further if it becomes appropriate to do so. So we're making decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. And that's an overview of what my colleagues and I at the Fed are working to accomplish. The bottom line, if you're a student, is that we've made considerable progress in reducing high inflation while maintaining a strong labor market with a lot of opportunity for new graduates. The unemployment rate has moved up a bit, but it's still very low by historical standards, and by many measures, it's a great time to start your career. You'll face challenging decisions soon about what professions to enter and what companies and other institutions to work for. Of course, some of you will become entrepreneurs, but each of you has already made one really good decision, and that's coming here to Spelman. Whatever opportunities and challenges emerge, education will continue to be a key to success. Higher education is an investment and not just of money. You're investing your time and great effort to gain knowledge and skills that are preparing you for successful careers. Your success will make for a stronger economy. For our part at the Fed, we're doing our best to foster an economy that gives you the best opportunity to succeed. And with that, I will hand it back to you, President Gale. Thank you.
So not a lot,
Well, thank
right?
you so much, and particularly thank you for that word of encouragement to our students. Sometimes
Didn't say
in
much.
the midst of what has been a turbulent economy, it may seem a little daunting, but as we say at Spelman, we are undaunted. So, and I also want to thank Lisa Cook for all that you did to make this visit happen, but also for all that you do to represent this school so well. So thank you so much. And to your colleague and our friend, Raphael Bostic, who is the president of the Atlanta Fed, it is an honor to have you here with us. And our colleague from Georgia Tech, Kay Husbands-Fielding, thank you so much. She's been our co-collaborator in building this. So let me just start. And before I dive in, maybe just start with a few comments about you, or a few questions about you. How did you get here? Okay, I'm a doctor. I know how you really got here. But you're not an economist. You are trained as a lawyer, did investment banking, did some other stints in the public sector. What was your journey, and would the young person, like the young people who are sitting out here today, be surprised at where your path took you?
So my path was, I'll start with when I graduated from college, and I grew up in Washington, D.C., and the whole Washington, D.C. political scene is there, but my parents and my family were not part of that. We were just people who lived in Washington. My dad was a lawyer. But when I graduated from college, I didn't have a plan. I hadn't thought it through, but I did have one thought, and that was that I wanted to be somebody who had a private sector career, but who also came in and did public service from time to time. And I was thinking of people like Cyrus Vance or George Shultz, who had, important private sector careers, but every 8, 10, 12 years they would come in and serve in the government for a while. That's a unique feature of the U.S. system. You don't really see that that people can have both of those. And oddly enough, that's kind of what happened. So I wound up going to law school. It wasn't that I was dying to be a lawyer, but that was an obvious thing. My dad was a lawyer. I practiced law for just a few years, and then I moved into investment banking because we were working with serving investment bankers, and I could see they were having more fun than we were. So I moved into investment banking, and I really enjoyed that. It was I worked on a lot of mergers. It's a very exciting thing to do. Did that for quite a while. After doing that for a while, I had an opportunity
Powell
to do
doing
public
blow in the
service. I
80s
did
and
work for
M&A.
Washington and serve in the Treasury Department as an assistant and undersecretary under President Bush Sr. Then I moved, so I did that. Then I went back into the financial business and was a partner at a big private equity firm for a while. And now here I am back in public service. So what would you take out of that? One, it is a real, it's such an honor to do public service. And if you have a mainly private sector career and you want to give back through public service, you can do it in this country. And I would think this, but I think it's important that people in government positions, at least some of them, have had the experience of being in the private sector. At the same time, I think being in the private sector, I think, is informed by also having worked in the public sector. So those are some things. So that's how it all happened. It was pretty unpredictable, but I was willing to change careers and pay the price. And pay the price of having to learn a new field. I had to do that over and over again, but it was worth it.
Yeah. So curiosity is probably another one of the things that spurred you on, which is one of the things we talk to students about all the time. Now, as a leader, you get a lot of high marks. This year's word of the year in Merriam-Webster was authentic. And people often talk about you as being an authentic leader. Could you talk a bit about how you see your leadership style? And authenticity is a tough thing to pull off when every word that you say people hang on to. So how do you play the role of an authentic leader with such a very, very difficult, challenging job?
So the Fed, I stepped into a role. The Fed does so many things well and right, and the people I succeed are such heroes, really, and so successful and so good at what they did. So, but I think when I think of myself in that way, I'm kind of a more informal, I'm a relatively informal person, and I really do think of getting to good decisions. Part of it is just having a lot of really smart people around you, like President Bostic, like Governor Cook, hearing what they think, and hearing a bunch of different views, and a little bit crowdsourcing thinking about issues, and then coming to a decision after that. That's a very comfortable decision. So, but that requires you to really hear what people are saying and understand their arguments. So that comes naturally to me. I also I felt that it was important that we substantially increase our outreach to Congress, which has oversight. In our system of government, it's Congress that has oversight over the Fed. And so my colleagues and I spend much more time than we used to going up to the Hill and talking to them and listening to them more. And I think that really pays off. They understand that we're a non-political agency, doesn't use talking points. We're just trying to do our jobs and stick to our jobs. And I think even if they don't agree with what you're doing, and even if it's very difficult times, they know that you're doing your very best, and they trust you to do that.
So on that, one of the things I think you have done well, and I would argue your predecessor was good at this as well, is trying to decode the Fed a bit. It is, for many, still a mystery, and you started talking about the dual mandate and what really is the Fed's responsibility. But you don't have a lot of tools. You have a limited set of tools, if you will, to have an impact on that. But people think that the Fed can do all things for the economy. Could you talk a bit about where your responsibilities and what you are able to do end, and where others need to take the next step and move things forward, and particularly this interface between monetary policy and fiscal policy, and how that works in the real world? Let me start by saying the things that we actually do. So the thing that I talked about was monetary policy. So we use our tools to foster maximum employment and price stability, two equal goals in the law. And that involves raising interest rates and using our balance sheet to either slow gradually or speed up the economy to move the economy toward those goals. We also, though, regulate and supervise banks. We have a broad responsibility to support financial stability to the entire financial system, which we do really through our liquidity tools. That was the original purpose of central banks, was to be there with liquidity, with cash when bank runs emerge. And if there's a facility there that exists, then the bank run doesn't happen in the first place because people know they'll get their money. We also play an important role in the payment system. So we have pretty broad roles. People do expect things of us that we don't really do, and it is really important to respect the line. Most things in our system of government are and should be assigned to the elected branch. Nobody elected us to do things. We're appointed to do specific, narrow, really important things and stick to those things. It's the elected branch of people. They've stood for election. The president has, the Senate has, the Congress has, and it's very important to not walk onto their turf, because those things are consigned to the democratically elected branches. Very few things are assigned to an institution like the Fed that has the protections I mentioned. We serve long terms. We can't be fired except for malfeasance, and Congress would have to pass a law to reverse one of our decisions. No one can do it. So we have to respect
that independence by sticking to the jobs that we have, even though, it's very frequent. When I testify, which I do a lot, we had a senator speak to us at dinner the other night, and he pointed out that whenever they have, me or a Fed chair in the chair testifying, they always try to get us to support their fiscal policy.
Right.
Raising taxes, cutting spending, all those things. And we just can't do that. We have to stick to what we do and stay out of politics, and that's what keeps the Fed independence. And it's what enables us to be that rare thing in Washington, which is a non-political agency that is respected by both sides, where they'll give us the room, they'll criticize us publicly, but they'll give us the room to do our jobs, and our jobs are really critical for every American.
Yeah, and that nonpartisan and people believing in that is so important. There are things that you can do specifically as the Fed, and you talked about them, things that you can't do. But one of the other things that you have as the chairman of the Federal Reserve is the bully pulpit. Could you talk about how you have used that and where you think the limits of that, where is that useful, and what are some of the kinds of things that you use your bully pulpit for?
That's a very challenging subject because, of course, I have many opinions that stray far beyond our and all of us do, far beyond a narrow mandate. So the occasions for addressing topics that are not precisely our mandate have to be very few and very selective. So Fed chairs have traditionally been willing to say about fiscal policy, for example, that the U.S. budget, federal budget, is on an unsustainable path, meaning that the debt is growing substantially faster than the economy, which in the long run is by definition unsustainable in the long run. But we don't get into calling Congress out or telling them how to balance how to bring down the deficit, and we don't do that. I stay out of that because we're not fully achieving one of our major goals right now, which is the inflation goal. So, and Congress has oversight over us, not vice versa. But there are occasions when you have to say something. So, and we were one of many public and private organizations that had to speak up about the George Floyd incident and in that very extraordinary moment in our history, and we did, and I wouldn't take that back. But we don't want to be commenting on political issues except in the rarest of circumstances like that one.
Mm-hmm. We talked a little bit about this intersection between fiscal and monetary policy. I think COVID is a good example of how both the Fed as well as the administration and Congress really put extraordinary measures in place to be able to, as best as possible, control what was a very challenging economic situation. What have you learned from that? What were some of the best practices? What are some of the lessons learned from what was an extraordinary time?
It's tempted to start by saying that we'll need some more years of perspective to really look back and have a better answer. But I'll give you a sort of in the middle of things, tentative answer. So, I'd start with the fact that the U.S. economy has really been the star performer in the world since COVID. And so, we've had higher growth, we've had a stronger labor market, we actually have had inflation coming down now faster than most other economies. So basically, compared to other countries, we've done well. Looking back, the economy got stronger much faster, I think, than we expected and than most people expected. If you think about, if you go back to the time of COVID when it was actually hitting, in the first half of 2020, you're looking at a situation where the economy around the world is closing, where we don't have any idea how long it'll take to get vaccines, where we don't know how we will reopen the economy. If you can't get vaccines, we didn't know how lethal the disease was going to be. So there were real possibilities that you could be in a longer-term situation where you just couldn't get the economy back up to full speed. We just didn't know, and so Congress acted, with no
A couple of
dissent,
comments he made about monetary
moved
policy
to
were
pass the CARES
kind of
Act,
hawkish.
which literally put
But not
trillions
very.
of dollars of potential lending power in our hands.
He said
It was
they
so big
haven't
that we didn't have to
addressed
use it.
inflation fully, which is
The
true.
financial markets were kind of closed, and they reopened without our having to use this authority. So we made very few loans in the end. It was amazing. But so if you look back on that, I mean, what you know now that you didn't know then was that the economy really did recover much more quickly and much more forcefully than we thought. And of course, you would have acted a little bit differently.
That's because you pumped it full of money.
But overall, we'll have to judge this with some over time, looking back over time. Remember how extraordinarily unusual, unique the circumstances were. We hadn't had a pandemic in 100 years. No one knew what to do. At the very beginning, there was a question, well, why is the Fed even focusing on this? And then, if you remember, there was a very small stimulus bill that couldn't pass and then 2 weeks later, the CARES Act was passing with all this. So it was a moment of great uncertainty and learning.
And so we're still probably in a moment of a fair amount of uncertainty, partly because the economy isn't acting as might have been expected. So sitting now, thinking forward, to the extent that anyone can prognosticate, what are some of the lessons, because of what we went through with COVID, that might help us think about where we need to go, even though things are a bit unpredictable still?
The economy has repeatedly surprised us and all other forecasters. So if you go back a year, not many people, and I'm not aware of any people who forecasted that we would have quite the level of strong growth that we have had in 2023, around 2.5%. A labor market that's still been creating millions of jobs, and yet inflation beginning in June coming down, very meaningfully. So coming down significantly. So, and those are all good things. All three of those things are good things. So we've been surprised on the upside this year. In 2022, when we were raising rates very rapidly, it didn't seem like we were getting any payback from that, but we really did get a lot of payback this year, and we also got the unwinding of those pandemic effects that I talked about. So that's people dropped out of the labor force, and they didn't come back in 22, and then they did come back in 23, and also immigration picked up. So all that's happening. So looking ahead, once again, we're still in a place where there is there isn't any experience with year 3 of the pandemic recovery, the last time we had a pandemic. It's just unique. But so if you just take on board
Jimmy
what I
is
said about where
fine.
the economy is and where policy is at a restrictive level.
What's up
meaning
with
it's
Top?
holding the
Are they
economy
still in
back.
business, or is this
Inflation still
another
running low
Revlon
on
play?
target,
I mean,
and
it's
moving in the
not
right
really a
direction.
Revlon play. I'm not
So
buying
we
any of
think
it. I'm
the
just
right
buying
thing to be
options
doing
on it.
now is to be moving carefully, thinking carefully about how things are going on, letting the data tell us what the story is. The data will tell us whether we've done enough, whether we need to do more, and that's what we're doing. We're moving. I would characterize it as moving carefully.
Yeah, and kind of taking it based on circumstances by circumstance.
Let the data reveal the appropriate path. We don't need to be in a rush now. Having moved quickly and forcefully, we're getting what we wanted to get. We now don't have to. We now have the ability to move carefully.
So probably my last COVID-related question, but clearly one of the hallmarks of the COVID
Why would the Fed
economy
chair speak on
was how
GME? They
globally
don't talk about
interdependent we
equities.
are.
Ever.
Could you talk a bit about your relationship to the other central banks and how during times like that you work together? What are the ways in which you balance each other, and just a sense of how we, as the United States Central Bank, collaborate with others?
Yes. So the central banks meet 6 times a year in Basel, Switzerland. Just the central banks, not the elected governments, not the finance ministries. And that wasn't part of my world before I was chair. But so and we don't issue communiques. We just talk about, we go there for 3 days and we just talk about what's going on in economies around the world. And also they're cross-cutting issues that we deal with, like how's inflation going, and all the things that matter for the economy, what's happening in labor markets, what's happening with monetary policy. So that's enormously informative. And as you pointed out, nothing proves how global the economy is better than the pandemic,
Crisis,
right? I mean,
yeah.
it was global. During the pandemic, I was in extremely regular, often more than once a day, with other heads of other major central banks by phone. We were the only one. Remember, at the time of the global financial crisis 15 years ago, there was plenty of room to cut interest rates. That was not the case. Our interest rate was really the only one that was far enough above zero that we could meaningfully cut it, which we did. Mm-hmm. But nonetheless, we were always talking, the major central banks were always talking about what's going on, learning from each other and that kind of thing. And it's very important because when there's an international crisis, you need to know the people you're working with, you need to trust them. And by the way, this is very much replicated at the staff levels between the major central banks because a lot of when there is a crisis, a lot of the knowledge about what to do and how to do it in our very complex financial system, in the plumbing of it, that rests with the staff as well as with governors and Reserve Bank presidents. But the staffs know each other well. There's a seamless web around the world of people with all that knowledge, which in a crisis, to see them come to work and do what they do is truly amazing.
Do you feel like, having gone through that crisis together, the system of central banks is working even closer together than before?
I think we don't have the ability to, we don't do,
Yeah, sure.
We don't collaborate on, we each serve a domestic mandate, right?
Right.
Our mandate is to work for the people of the United States. But yes, I think there's a world where we really understand each other and know what we're doing. The dollar is the world's reserve currency, and there are dollar funding markets around the world that are very important for our economy. So we support the dollar as a reserve currency by we have 5 standing swap lines, and we actually opened up 9 additional ones with central banks around the world to support the role of the dollar. It's enormously important in relieving financial stress, and both in the global financial crisis and during the pandemic. So we're very mindful of international economic flows, and it's a critical part and a much bigger part of the chair's job than I would have thought watching from the seat of a governor.
Mm-hmm. Let me talk about an issue that is near and dear to my heart, and I think is also a big concern for many people here in Atlanta, and that's wealth inequality, and particularly the racial wealth gap, which in Atlanta is, I think we're ranked number 4, 2, 3, or 4. I don't know, Raphael, where we ranked number. We're up there in terms of wealth inequality here in the Atlanta region. Obviously, there are some things that the Fed can do to impact that, but also there are also things the Fed cannot do. I know it's something you have talked a lot about. Your predecessor, Janet Yellen, also talked about that. Could you speak to wealth inequality, thoughts that you have about the ways that the Fed can and cannot be helpful? And I say that also thinking about some of the critique that people have around bank regulations and how that may or may not play into the ability for low-income populations to get access to credit and important things like mortgages and credit for starting businesses. So bottom line, wealth inequality, what can the Fed do, what can the Fed not do, and are there more things that you'd like to see happen to make that less of an issue here in this country?
So one of the things that we do is just really part of what enables us to do all of our jobs is we're careful students and we hope deep, thoughtful students of what's going on in our economy and in other economies. But one of the things that's been going on in our economy for close to a half century now is this rising inequality. And so the first thing that we do is we collect and publish a tremendous amount of data on this with the national accounts that we do, with the Survey of Consumer Finance and many other areas. If you go to our website, there's an awful lot of data that we collect and put out about disparities in income and just income levels and by all different kinds of categorization. So we're a source of data, a big source of data on our website.
Market keeps
Second
asking
thing
us
I'll
support
say is
resistance
the thing that
lines.
we
I'm
can
making too
really
much
do-
money.
there are two
Have a
things that
great
we can really do
weekend.
with our
Gherkin the
policy
pickle jar.
that matter.
Navy
One is-
nuke,
one
wind
is to
pigeon
enforce
whale.
the fair housing laws. So we have powers to enforce fair housing laws. Not all of those powers. They're shared around the bank regulators, but that's an important one. The second one really is, and maybe the single most important thing we can do, is if you look back at the very long expansion that ended with the pandemic, longest expansion in recorded U.S. history, 10 years and 8 months. What started happening in the last
Flows
3
are still
years
pretty
was
neutral.
most
Positioning
of the
hasn't
gains
changed
were going
much.
to people at the lower end of the income.
We're chopping into like the upper
The gap
range of the
between
positioning
black
right now.
unemployment and white
There's a
unemployment
gap
was at
between
historic
85
lows.
and 90
And
that
it
could
was
act as a
by the way, the
resistance,
economy
but
was not heating, overheating or anything like that. It was we're
puts
looking
haven't
at this
really
and thinking,
moved
this is
either.
this is so good for the United States, so good for America. And it can go on, it can keep going, and very beneficial. So the thing we can do is use our tools to get back to, it amounts to this, an extended period of strong labor market conditions. We know what that does. That you had companies, we heard the stories like this, companies were going into prisons and finding people who were not going to get out for a year or so, and meeting them and talk and starting to train people and get them, because there just weren't enough workers. So very beneficial, positive things like that were happening. You asked about, the other thing is, we don't really have, it's the elected branches of
No, we
government that
broke
really
up,
have the,
so that's
the
usually not a good
tools
sign of
that
rejection.
can address these questions of inequality, and that's around education and all the things, tax policy, all those things are really not in our hands. But the tools that we have, we will use. I don't think of bank regulation as being, the point of bank regulation is to have banks be safe and sound. When banks aren't safe and sound and they collapse, they hurt. We saw this in the global financial crisis. It's really, really damaging.
Did
to
JPL
the
just
broader
tout
economy.
the benefits
Very
of
high
prison
unemployment,
labor?
and
I think a little
that
bit,
time,
yeah.
Very painfully slow recovery, because when the financial system is damaged the way it was, the economy was just going to grow. It grew very slowly for 10 years. It did grow for 10 years, which was great, but we never saw that 3, 4, 5% growth year that we wanted to see.
So, you mentioned earlier the employment mandate, and that obviously feeds into issues of income inequality and to a certain extent wealth inequality. And the Fed has recently gone from saying just maximum employment to also inclusive employment. Could you talk about that and what that means to you and how you think the Fed can play a role in inclusive employment?
So really, the goal is maximum employment. And the insight that we had, and part of it just was what we saw during that long expansion, is that to be maximum, it really needs to be inclusive. Meaning, you need to be looking. Ultimately, as I mentioned, we don't have the tools to target particular groups or anything like that, but we do look at the data, by racial and gender and income and all of those things, immigrants, native born. We look at that data, and all of that informs our assessment of whether we're really at maximum employment. So we said that maximum employment is a broad and inclusive goal, and that's part of our framework now.
Great. And I think words matter, and I think having that word inclusive in there does make a difference. I'm going to start opening it up to questions in about 2 questions. So people can come to the mic, but we are giving preference to students. So we'd like students to stand up first, and then all the rest of you after. But I've got lots of questions that I could keep going on and answering. But let me ask you, this visit is part of some of the learning tours that you do throughout the country. And, you have thought that it was important for you to get out and actually talk to people about how they experience the economy. Could you give 1 or 2 things that maybe surprised you or that were important insights as a result of actually getting out and talking to people?
So it works 2 ways. Of course, we have an obligation to go out and we want to explain what we're doing, and that's just part of our job. We want the public to understand what we're doing and why. That's part of it. The other part of it is, we get incredible amounts of data, right, aggregate data, and you can only stare at it so long. I find, and I think all my colleagues find too, when you talk to people about their lives in the economy, it starts to form into a story and into a more a better understanding of the details of the lives that people are leading. So, I mean, I remember many trips I've taken, and inevitably you come back and you say, "Wow, I really learned something there." And I mean, we went to the Mississippi Delta a few years ago, and at Mississippi Valley State, spent a great day there, visited a bunch of businesses and community depository financial institutions. And what did I learn? I learned what life was like in the Delta, and the way they live and their aspirations. Met some really talented kids, by the way, which was great. I learned that. I was in another one. I was in York, Pennsylvania, which is a small manufacturing town. And if you think about smaller manufacturing cities in the United States, if you're
See, he's dropping
muscle memory would
GME.
be that they must have really suffered because so much of our manufacturing base went overseas with China coming online.
Visiting the GME warehouse.
And interesting thing about York was that what I learned was they actually had a strategy to combat that, and it kind of worked. I mean, they brought resources together around some manufacturing and some other business things, and it worked. York is a healthy, thriving city, and there are many other examples of cities that are just lost their manufacturing base and they've just kind of collapsed fiscally. But I think it was interesting to see that if you have a plan, it can actually work. And I'll go home and I'll think about this trip, and I'll no doubt have learned some great things.
Great. Well, we hope you will. One last question before I open up. So what does fun look like for the chair of the Federal Reserve Board? Like, you can't go to a cocktail party and say much. How do you have fun?
For me, a big party, and I mean this is really as fun as it gets, is like a really good inflation report.
Okay, first question.
Thank you for coming to speak with us today. My name is Catherine Stewart. I'm a graduating senior at Spelman College, majoring in economics, originally from the South Bronx area of New York City. So the Fed aims to have 2% inflation rate and to maximize employment and price stability. And as you mentioned earlier, the inflation rate is currently at 3%, so not necessarily where the Fed would like it to be. As we know from the
3.2.
principles of macroeconomics, over the long run in the business cycle, inflation decreases during recessions and increases during expansion. So my question for you is, how will the Federal Reserve address the volatility of inflation while avoiding a potential recession in the economy? I know you mentioned earlier that one way would be raising interest rates, but can you think of another way that could address this dilemma?
Great question. Thank you. So if you look at the history of campaigns to bring down high inflation, what you will see is in most instances, not all, but in most instances, that has wound up. We know that higher interest rates, of course, will slow the economy, and that's the tool we have to bring down inflation. In many instances, that has resulted in significant job loss necessary to restore price stability. We haven't seen that here, and we've always felt, my colleagues have always felt that we had a chance, that there's a path to getting inflation back down to 2% without that kind of large job loss. And I still believe that. I've always believed that, and we're on that path. But some softening in the economy has happened. You've seen growth slowing back to a more sustainable level, and we hope we can stay on that path. We have to restore price stability because price stability is really the bedrock of the economy, and everyone, once prices are really stable, inflation's stable around 2%, people can stop thinking about inflation. They can focus on everything else. When inflation is volatile and high, not many are old enough to remember what that was like, but it's really bad for businesses and households trying to plan. In terms of other tools, I wish we had them, but the fiscal authorities have their tools, we have our tools, and our tools are interest rates and our balance sheet, which affects interest rates as well.
Next, Mike.
Thank you for that. Can you all hear me?
Yes.
Sounds good. Good morning, Dr. Gale and Chairman Powell. This has been such a didactic conversation, so thank you for all that you've shared. We spoke a little bit about optimal employment and maximizing it and ensuring that it's inclusive. And so earlier when you were speaking, you spoke about your background, Chairman Powell, in private equity and investment banking, and even alluded to entrepreneurship. And so my question for you is, during these contractionary phases of the economy, or where there's threats around contractionary phases of the economy, how can minority entrepreneurs ensure that their ventures are backed and armored to ensure that they're still stable during contractionary phases and when those policies are in use?
So how can minority entrepreneurs assure that their ventures are supported? So first of all, let me say entrepreneurship and innovation are kind of the secret or not so secret rocket fuel of the economy. It's entrepreneurs, both business and social entrepreneurs, who look at the world and see something missing and create it there. And I never had that gift, but the people who had that, those are the ones who really change the world. And you're young and you're starting out your careers. If you feel that way at all, you see something missing, my advice to you is to go for it. And don't hesitate. And so entrepreneurs are huge. That's how things happen in our economy. Is someone says, "Hey, we don't have an X. Let's create this." So, in terms of how to make it through hard times, I mean, it's right now. Of course, if you go back before the pandemic, there was a whole lot of money for entrepreneurs in every field. It was a time when. And that has dried up a bit. Venture valuations have come down, but just know that it's a cycle. And many ventures have gone from promising to almost dying to incredibly successful over time. And if you look back, you talk to any of the great entrepreneurs, they'll say, I had a time when I came this close to just wrapping it up and going to law school. Nothing wrong with going to law school. But they'll say, I stuck with it, believe in your dream, and keep pushing.
Next one.
Dr. Gale and Chairman Powell, I want to thank you for hosting this forum for the Atlanta University Center. My question for you is, how do you anticipate the markets?
And your name?
My name's Jonah Watts. I'm a sophomore business finance major, econ minor over at Morehouse College.
Thank you.
My question for you is, how do you anticipate the markets will respond to the acceleration of artificial intelligence and economical resilience of Americans in the long run? And what provisions has the Fed sought to account for this?
So artificial intelligence is something that everybody's spending a lot of time trying to understand, and we have experts in all the time and try to understand its implications for the economy. And there's just a range of views. We don't really know. The question will be whether it is employment augmenting, like so many technologies, so that it's not, or is it employment replacing? And over time, it may be first one and then the other. But that's the question. So if what new technology does is it raises productivity. In the short run, it can sometimes put people out of work, and that's been true of advancing technology for forever. So what is AI going to be? And I think we have a very healthy discussion going on out there. We actually had a meeting at the Board of Governors in Washington with 6 or 8 of the very well-known. These were academic economists and experts, and they were split. There are people there who are on the optimistic end side of things, saying, we basically have a labor shortage and the economy wants to grow faster and AI is going to help us do that and it's going to lift all boats. And then there are other people who see that it can replace so many tasks that are actually not just that are pretty complicated tasks that you need some education to carry out, but AI can actually do them maybe even better than people. I don't think we know. I think that there's also another side to it, which is the potential systemic ramifications of having AI and the financial markets interacting. And so there's a lot of thinking going on about this. We're in the early stages and a lot of uncertainty. So I'd say, going to be a while before we really understand how it needs to be regulated and how do we capture the obvious potential productivity increasing benefits of it without experiencing macroeconomic or financial stability costs.
Do you mind going over a little bit? Great. So we'll take the people who are standing now, because we're at risk of going well over time, but would love to get the next questions in.
Thank you, Dr. Gale. Hello. Thank you both for being here. I'm Alicia Sawyer, a senior economics major from Atlanta, Georgia, also a Lisa D. Cook Scholar. And my question is really about your background in investment banking and private equity. How has it impacted your decision-making process, both when you initially entered the public sector and where you are now?
So I've enjoyed all of the different parts of my career. I really feel like I learned a lot, and they all kind of inform everything. But so when I was an investment banker, we were providing financial services to largely companies. So I learned to understand the capital markets and also business models. You know, when you're working with a company, you need to understand, why is this company here? What does it do that other companies can't do? How well does it compete, and that kind of thing. So it was a real education in both how financial markets work and how they value things, and also in business strategy. You need to understand the business strategy of a company to give them the service that they need. As a private equity investor, you're actually putting money to work behind these things. And I'd say what I learned there was a lot more about business models. And Warren Buffett likes to say, when a good manager meets a bad business model, usually it's the business model that wins. So you look for very strong defensible business models, and you also look for great management. I'll tell you something about management. When I became a private equity investor, I asked the head of our firm, who was a Hall of Fame investor, tell me about how do you spot a good manager? What does a good manager look like? How does that, what are the characteristics? And he said, there's so many different ways to do it. And so what I've observed is, people can become good managers and good leaders who are very different from one another. So within each person, as long as you have a high level of self-belief and are willing to work really hard, there's a leader in there, there's a manager in there who can do it your way, in your own particular way. I mean, there's some common factors, but it really is remarkable how many different paths there are to being successful in management and leadership.
Thank you.
Good morning, and thank you, Dr. Gale
4600
and Chairman Powell for
the
speaking
next
with us today.
resistance.
My name is Peyton Thomas. I'm a senior psychology major from Hampton, Virginia. And I know that you spoke to a little bit what the Fed can and cannot do in terms of the racial wealth inequality in America. Do you have any advice for what we as young Black college students can do to help combat that racial wealth inequality?
I will say this. The thing that has always moved me the most in that area is education. So I was the founding chair of an inner city charity in Washington, D.C. I was also active in a similar charity in New York City to help inner city kids get an education. And you find their parents, or often their single parent, are desperate to get them the education they want and keep them away from trouble. And so there's so much to do there. And every kid who gets through 8th, 9th, 10th, 12th grade, and is doing well at it, it's just a person who now has a chance at a middle class life. So I think that, to me, that's the thing. Our education, it's really hard and really important, but education is the road for people. We have. One form of inequality is mobility, and there's a lot of work by an economist named Raj Chetty, whom I know my colleagues know, who really measures mobility. And U.S. actually has lower income mobility than other major democracies, and it correlates heavily with race. So I think there's so much to do there. I mean, my wife and I spent a lot of time and no small amount of money supporting this cause over 25 years, but I think that's a great cause.
Thank you.
Thank you.
Hi, my name is Maya Spencer. I'm a sophomore economics major, management and organization minor from Williamsburg, Virginia. And my question is, what are the Federal Reserve's observations or analyses regarding the current trends in reduced consumer spending, and how does this impact economic indicators and the Fed's monetary policy consideration?
Consumer spending, yeah. So consumer has been very strong, and it's been surprisingly strong. There was what were called excess savings. So people couldn't spend money on trips and, restaurants and bars and things like that because it was COVID and everybody was staying home. So they saved money. And also the government gave, checks to people to sort of make them whole and replace their lost income and that kind of thing. So there were particularly people who were income constrained had much larger piles of savings than they had before the pandemic. And there was always this thought that would get spent down, and so this very strong spending we had in 21 and 22 would ultimately go away. What's been amazing is how strong consumer spending has continued to be, and it may well be. You do see, though, credit card borrowing going up. You see defaults going up now. So we may be actually getting to the end of that. So to your point about monetary policy, we're, of course, very, very carefully watching as the economy appears to be slowing this quarter. We think it's quite early in the quarter to be able to say that, but we think the third quarter was very, very strong GDP. We think it's slowing now based on the limited data that we have, and all forecasters basically are saying that it will be. We're looking to see how much slowing there is. 70% of the U.S. economy roughly is consumer spending, and so that's going to be the big thing. As long as unemployment remains low and employment remains high and wages are moving up above inflation, though, there's no reason why spending wouldn't continue to hold in there.
Thank you.
Hi, I'm Anna Princito. I am a sophomore international studies major from Dallas, Texas. And you touched on public service, and I really enjoy that because I believe that if you have an opportunity to give back, always do so. We are blessed to be at an institution that has a plethora of opportunities, but for those who do not have access to higher education and are just trying to make ends meet, what are the public service policies put in place that the Fed has, and how can we get involved?
With the Fed?
Mm-hmm.
So we hire, for example, if you look at the Atlanta Fed, we hire research assistants right out of college to work. There are some RAs, I think, at the Atlanta Fed. Raphael's nodding, from Spelman. So we're very much poised to take in young people, and I would just tell you to, if you look on our website, reach out to us. We'll be very happy to interact with you. And there are 12 reserve banks around the country, and they're always hiring research assistants. There's also the Board of Governors in Washington. As you get down the road, if you were to do an econ PhD or a law degree or just a general public policy, want to do public policy, and you've got some experience, we have in the whole system we have over 30,000 employees, I want to say, but that's the 12 reserve banks and the board together. We want people who want to do public service. I'll just tell you, it's enormously satisfying to do public service. It's also satisfying to work in the private sector with a company and share that mission. You feel the same way about with that in the private sector, but nothing quite like serving the public.
Thank you so much.
Thank you.
Phenomenal questions. So I almost sat back down because they were so impressive. So I could just give a hand to the Spelman students. But Donnie Beamer from the Atlanta Mayor's Office, and I oversee our Office of Technology and Innovation. And so we want to make sure our entrepreneurs succeed. So see me about that afterward here in the city. So thank you for being here. Thank you for organizing it. And it's a special treat for me because I'm a classically trained economist from Georgia Tech. I see my dean in the front. But I'm wondering, is there a target on labor force participation? Because unemployment is low, but it feels like those labor shortages you talked about are remaining, and it's been much larger in how it impacts our experiences and also people's household income than what's reported.
What the fuck?
Great question. Let me open that up a little bit for people. So you have the general public, right? And a certain number of those people are either working or looking for work, actively looking for work, as in they've looked within the last month. And those people constitute the labor force. They are participating in the labor force, either by being employed or by actively looking for jobs. But there are many, many people who are not in the labor force. And if you're not in the labor force, then you're not counted as unemployed. You have to watch. You have to look at all of those things to understand how the labor market's going. During the pandemic, many people dropped out of the labor force, and so I thought that when the vaccines came out and the economy reopened, that people would come right back, but they didn't. You ask, is there a number that we target? The answer is not really. We have an assessment of, if you look at what drives, the thing that is happening with labor force participation is, as the population ages, as people get into their older years, they become less likely to be in the labor force, and so there's a downward trend in labor force of about 0.25% a year. But that doesn't mean in any given year that labor force participation can't go up. There's nothing like a really hot labor market like the one we had to bring people back in, and it did in 2023. Or people stopped dropping out. It's the same thing. The net was that labor force participation increased. Immigration also increased, that's a whole other thing. That's just an increase in the population, and immigrants who come in, they tend to go into the labor force in about the same proportion, roughly, as people who are already here. So we wouldn't have a particular number. We're not quite back to the level of labor force participation that we were at before the pandemic, but that was before the pandemic. We had a 10-year, 8-month expansion, and participation tends to creep up as a lagging indicator in a strong labor market. So we're at a pretty high level of participation, as high or higher than the models would have predicted. But we'd love to see it go up further. We actually have lower labor force participation rates than many other advanced economies, which is not our self-image as a country, and not where we want to be. There's just a lot to do in the labor field. So another thing, if you're looking for an area of economics to study or a field to work in, the whole area of labor market economics and how do we support a better workforce, invest in a great workforce is a very important area to think about studying and working in.
Well, this is wonderful. Are you getting ready to close out? All right. Well, I will let you close out. Dr. Holmes, thank you for all you've done to help to pull this program together. I also want to thank Lauren for her wonderful introduction. And I'll let you close out, and I might have one word after you.
Oh, sure. Always. Well, no, I want to thank you, and thank you, Chairman Powell, for making this an enlightening and engaging event. Thank you. Thank you, Chairman Powell, for coming to Spelman. Thank you to your team for making this a successful event. And thank you for everyone in the audience also for participating and for your thought-provoking questions, for those who did have questions. I want to thank the Spelman community who also helped to make this a success. So the president's team, communications, STS, public safety, and many more. And President Gill, I will let you.
You wrapped it up lovely. I would just say, again, thanks to everybody. This has been a fabulous morning. It has been a wonderful conversation. Thank you to you, Chairman Powell, for spending the time, giving of yourself, but most importantly, for what you do for our nation and for the world. Public service takes a lot out of the person, their family, so we really owe you a debt of gratitude. But I think people recognize after this conversation why you are the right person in that role for these times. So thank you so much.
Thank you. Thank you. Thank you so much.
All right, that's it. So not a lot said, but we do have some zero DTEs up to 4,600 here. I don't think he really said anything that was particularly dovish or hawkish. Even if you read between the lines, there just wasn't a lot there. I don't know if bulls really win here. This moves back on zero DTEs, right? And there's, aside from that, very low liquidity. So while the range can be reached, the real question is, can it be sustained? And I'm not sure that that's true. I did say we could go to 4,600 repeatedly. I even said it earlier when we were at 4,580, and I was like, I wrote it on the fucking screen. I don't know. Upstart's kind of at gamma max. It could go higher, but it's also at gamma max. I have stops set on everything because if these 0 DTEs fall off, this thing's gonna get rugged fucking really hard. And there's no call interest really building above 4,600, which I have a big problem with. Oh, fuck. I got stopped out of everything on GME. Also, VIX has been increasing pretty steadily here, which makes me think de-risking. Maybe de-risking of local Vega risk at like 45.50, where puts do seem to be declining. Yeah, you said it yesterday too. I know. You can't add the /s after. Can Apple move back down? Yeah, why not? I'm not super concerned with Apple. I have a couple weeks on those calls too. Should we concerned about a March 3500p Vega play? Lapse and tail risk? Probably not yet. How do you exercise proper management on these meme stocks, dude? I had an upstart call with Theta, 20% stop yesterday. I got taken out before VUPS today. You have to be right. I mean, they're a bitch. I know. I've been trading them for like 3 years now. It's not easy. You take what money you can. You reposition quickly when you get stopped. If you see continuations, you got to be on top of it though. Meme stocks are hard to make money on. What's going on with the tips? I don't know. My fucking trading view and WeBull crashed in the middle of the stream, so I gotta reload everything. You're gonna have to give me a minute. Uh... GME still has some liquidity left, which I think is made pretty obvious by this heavy shorting right now. But it is running out. Was that a 1269? Bastards. It was. That's too funny. Well, that's all the profits taken. Maybe Tup doesn't give a shit. That'd be cool. Have we found a top here? Well, there's still a lot of put selling going on, but there's also a lot of call selling. In the money calls are taking profits at a pretty rapid pace. Very, very little left below 45.70. With only 75 meagerly defended at this point. Maybe that we're seeing 4,600 being sold as well. It looks like it could rocket. It kind of looks like it could fail. Possibly in a pretty spectacular way. Let me take a look at the longer dated interest and see if anything's moving around there. No. Increased put interest below 75 now. Gamma's kind of steepening. Gamma kind of steepens at 60. Yeah, I would say that if we were to lose 75 here, it could get pretty slippery. It's a drip sound I keep hearing. Oh, I think that might be the WeBull notifications. Nice. Oh, bounce that account back in a week. That got slippery for a minute. It goes down to like $200. I almost blew it up. Alright, my 4590p. Time to save my port. Can you teach me to do that in a week? What, like one-on-one? I mean, probably, but would you be able to do it? I mean, there's more to trading than just executing trades. Most of it's psychological. Can you keep repeating get slippery for a minute? I'll be in my bug. Hello, Baradactyl. How are the Gherks today? I assume not home because you're getting in your bunk. Jimmy bar rate just went up again. Why is TEP's volume so low today? It's not that low. It's at like 700,000. It's actually a little elevated. But there aren't really a lot of hedging requirements around this price. I mean, we're kind of equidistant between like like the 150 and $2 strikes. So if we move closer to $2, or yeah, I would say that volume would probably pick up a little. A little bit of vol shorting there. Highest it's been since June. Borrow rate, yeah. We might see the borrow rate continue to climb into earnings, right, while they leave the ETF liquidity untapped. I'm back from the support call. It looks like JPOW said, rah, 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 I'm JPOW. Yep. Yeah, you're correct. There was one girl that clearly had puts that tried to put the screws to him, but he slipped right out of it because, you know, lawyer. Would you do a Squid Game type scenario? I've been watching the game show. Like, all the mind games they played, I have no idea what that is. I've never watched it. Do you see silver poised to squeeze? No. Ew. I'm talking about silver squeezes. It's gross. COMEX markets are the most manipulated in the world. Everything that happens there is extraordinarily controlled. I hope this letter finds you well in the city of York in the New World. Today marks the date of my birth. Happy birthday, DraxX. I'd be so grateful for an acknowledgement from the... Oh, it's fucking like everybody's birthday today. This is insane. It's like 4 of you now. Happy birthday, DraxX. I hope you made some money today on this day of your birth. Now that you've got the port back up, are you going to YOLO it all on 30 minutes to expiry options today? Fuck yeah. These ports of the margin port has come so close to being blown up so many times, and it's really my fault. I should have started it with more capital, but it seemed like more fun to start it with something that would have a really high failure rate. Like, and I started it with 1,500, which, you know, seemed good enough, right? You could sell like three credit spreads a day. That was a mistake, but I've got it back closer to like 7 or 8 grand now, so it's doing a little better. This account I started with 1,000, and I almost blew it up last week, but it's back in it now. Any thoughts on the next 30 minutes on SPX? It's head and shoulders. It doesn't look super bullish. At least on longer time frames, it looks like this could start to fail soon. Dork, crossover T+1. Hello there, it's most definitely my birthday today, too. Why didn't you get me a gift? Do you hate me? I'll forgive you for $500. You can take your forgiveness and shove it. Happy birthday. Was there news on Airbnb? I don't know. I got stopped out of my spreads this morning. I haven't really looked at it again since earlier. The last time someone asked me about it. Give me a second. Maybe? No. No news. Just pumping. Might be sold calls pulling back or something. I got stopped out at like a loss too. That sucks. Yeah, I'll probably just wait and re-enter it. I'm not really sure why it's moving up so hard today. What if JPOW tickles some bulls later? He's not speaking again later, is he? No. Bar is. Oh, is he doing another speech? Hold up. Seriously? There's really no short calls to squeeze up here. There's a few, but very little. That's why the zero DTs are so important. So he's speaking again? Oh, he's speaking with Cook. At 2 o'clock. Fuck. Alright, well, get that set up, I guess. Bars speaking on bank supervision and regulation in Germany. Oh, that was this morning. Okay, never mind. I'm just trying to rack up the speaker fees before he runs out of before the blackout period, right? Gotta get as much money in as you can. You gotta respect the hustle, if nothing else. Head and Shoulders invalidated. Yep. Broke up. Should be super bullish. Our 2K's up 2.5% today. And shit's barely moving. God damn it. Huh. Kind of turning top around again. Why are they fighting back so hard against that? Fidelity is down and my other money call is up 300%. Try your phone. Or if you have access, active trader. Sometimes those will be up even if the website's down. Calls coming in. Roughly the same amount of calls, just already on the chain. It's a little bump, but not a huge one. ATP is up right now. There you go. BofA says SPX to 5,300. I love how each one that comes out slightly higher than the one before it. Maybe they're trying to get retail to pull all their money out of money markets and buy equities so they can dump their shit. This is gonna run out of juice and get rugged. Kind of just got rugged a little bit right there. They're not predicting 4,300. They're announcing it. What do you think? Beat or miss for GME earnings? This one's tough. I mean, there's some diminished returns to consider in SG&A cuts, and retail sentiment's been kind of a mixed bag, as has retail spending over the last quarter. I think there's a potential that they could possibly beat on EPS but still remain negative while missing on revenues, which isn't terrible. I think the chance at positive EPS is pretty slim. If they beat, what does that mean for their eligibility to go into the S&P 500? They're never getting into the S&P, dude. Literally, you don't want them to either. Don't trust the data. I've been spending like a madman. 0 of it has been at GameStop, but I'm spending at an unhealthy rate. Gmi has more gas. Yeah, I mean we can retest 16 again. Gmi even have a plan to achieve profitability anymore now that they've given up on NFTs? Anything gleaned from where JPM collar settled? Seems like this is likely our top range. First of all, it was the smallest of the 3 collars. The 4,300 puts are kind of interesting. Those had about 111,000 delta yesterday and 3.67 million Vega. They're trying to push it to 4,600. Even if they hit 4,600, I still think we can fall back. I don't know how they hold these levels. That's a whole nother story. This is all just 0 DTEs. Has your outlook changed at all? Not really. No. VIX not dropping because sold calls are still getting squeezed, or what? Or because people are buying puts. I mean, rack up speaker fees before he crashes the market and no one wants to talk to him again. Tesla's sub 200 soon? I didn't even look at Tesla today. Did it bounce off gamma neutral or charm neutral? Bounce off gamma neutral. It's having a pretty good Friday. Fridays are usually good for Tesla, though. I can still see it hitting 200 over the next quarter. It's not that far away. It's had a hard time holding above gamma neutral anyway. And this bounce isn't particularly dramatic. Is pullback then rip still likely in the next few weeks? I think we can still pull back like before the pre like SLD period. I guess we could stay up until the SLD period, but that's a lot harder to pull off. Is Zix going up over the weekend? I don't know. I've been going like long VIX futures every weekend because it keeps bouncing, like into the weekend. So maybe. Thoughts on gold? I'm long gold. I've been long gold for a little while. My calls are in the money, so that's nice. If they're gold going up is pretty bearish. There's some currency fears. A lot of people aren't really acknowledging, but they're there. Boomers don't drive gold up. Banks do. $45.50 puts for next Friday would be the stupidest purchase end of day today. Thoughts? Carries some risk. I mean, you're gonna get a bunch of theta eaten up over the weekend if you don't go in the money. VIX 12.6, and we're still under 4,600. I told you. How dare you? Boomers try their best to drive gold up. Why do boomers love gold so much? Boomers and doomers love gold. I don't know. When the apocalypse comes, they want to carry around giant sacks of shiny metal. Banks buy it because it hedges currencies broadly. And it's important for them to be able to do that when operating at an international scale. And they're not going to use Bitcoin. If Japan doesn't do it, what's the inflection point for when pumpers can't dump their bags on others? I don't really know if there is an inflection point for that. So glad I left Fidelity with my options account. It's fair. See, ISM manufacturing prices up, manufacturing new orders up, construction spending up, manufacturing employment down, manufacturing PMI contract. Curious. Huh. Or fear via hedge. How does gold hedge currency risk? Just because it's traded in USD? Well, it's not. That's one of the reasons it is a currency hedge. So even though frequently, you're gonna see gold price in US dollars, it's bought and sold all over the world in different currencies, right? And that means if the value of one currency falls, that can increase the price of gold in that currency, so that offsets the loss in the value of the currency. And its value tends to be independent of any one economy. And if technically it doesn't, it has no, inflation has no effect on it. There's some, because new gold gets discovered, but no one's really looking that hard. Gold makes a great paperweight, which is good for keeping your final letters to your loved ones on the table during the Yellowstone eruption. I live on the East Coast, it's not a problem. Is Upstart, if Upstart doesn't get rugged, potential for more upside next week? Maybe if Gamma Max moves up, yeah. Why is Fixie up today with USD JPY down? I'm pretty sure Fixie doesn't track USD JPY. It tracks like a JPM exchange rate fund. Is 45.95 the top for today? We'll find out. It's not a safe place to put your money. It's a place to put money. So you're saying those Alaska gold mining shows are just television? Does anybody ever see them actually find any fucking gold? They're like, yeah, we've been out here for 6 months in the tundra. And we've picked up 9 ounces of gold, which should pay for our operation next year and our salaries. It's like it, right? If oil could be stored as easily and cheaply as gold, would it challenge gold for that currency hedge position? No. There's shitloads of oil that's been discovered and is untapped. And oil is affected by supply and demand. Fixie does go up when USD JPY goes down, but they're not directly linked. Are there many sold calls at 4,600 that could be squeezed out? I don't think there's a lot of sold calls at 4,600. I think they're mostly long. You play the AMC buying gold mines wasn't a smart investment. They didn't buy gold mines. They bought a company that has the rights to prospect for gold, but none of the money to do it. You know, AJ, you have Google. You can go dive into the gold market. Go nuts. The same chart open to the top left and top right. No, I don't. That's VIX. That's SPY. SPX. These are different charts. Who dived headfirst into the gold market and regretted it? Midas. Rejection at 4,600. I wish WeBull had conditional orders. Speaking of which brokers have them? I know IBKR, Schwab, TDA. Pretty sure Fidelity, although I've never really tried to use them on there. I think Tasty Trade does. Tasty Trade does, yeah. I just told you why gold was a fucking currency hedge for banks. You just keep asking the same question over and over. Yeah, IBKR allows that. I don't really know if there's enough sold shit at 4,600 to squeeze. Right? It's like most of the positioning there's been long. It's been long for a while. Tasty Trade's okay. I have an account there. Top's getting shorted right now again. But the tips are closer, which is a good sign. I haven't heard your British friend today. Oh, I shut him up. Finally. I found out how to turn his annoying voice off. What about IWM positioning? There's a lot of OI at 185. Yeah, there is. What about it? Fidelity web app and ATP aren't working today. A few people were saying ATP was still working. But yeah, I've heard. Pullback here? We'll see. His constant issues are egregious. Yeah, I don't know why anybody's trying to trade options with Fidelity still at this point. As an active trader, that shit's unacceptable. But Fidelity doesn't care because the majority of the people who are with them don't trade actively. The rate of change is pretty impressive. Let's see, it's almost 1 o'clock right now. Diminishing returns on that. 4% of the S&P. Core 1 month and ES. Settings. Sorry, I'm just trying to reset up my some of my indicators. Looks like bond vol picked up quite a bit yesterday. Bonds are getting a little wacky. Hmm. Carry trade's dropping like a fucking rock right now. Line. Core 3. Yes, there we go. Correlation's still breaking down. 10, 20, 30. Are yields gonna start squeezing today? What the fuck? Hey, dork. Look at spreads, man. No, that's the wrong one. God damn it. I think we're at the top of the bull range here for ES. Although I don't know because all my shit got deleted. Wasn't J-Pow hawkish? He wasn't really anything. To be perfectly frank. He was his commentary was pretty vanilla. Rug pull yourselves, take profits, buy puts. You should just go to the CBOE and tell them that, Popcorn. That's on Fubo. Do you think it'll continue up or they'll short it back down? I don't see why they wouldn't short it back down. I want to sell some covered calls on it today. At some point. You know what's having a great Friday? Caterpillar. It finally broke up. Apparently, contraction in the manufacturing sector was exactly what they wanted to hear. Sorry for the dumb question. I've been away for a few months till this week. Why is VIX climbing as the SPX is going up? Well, there's two reasons. They're either squeezing out short calls, or people are going long puts, or both. Upstart's still kind of running a bit. Ooh, interesting. Is Tup gonna pop off here? I got stopped out of my upstart. So did I, but I got profits, so I was happy with it. I don't know if Upstart has enough call interest much beyond 30, but there might be some covering going on. My biggest problem with WeBull is not being able to adjust condors. That's bullshit. But the rest of it's fine. Sometimes they miscalculate your spreads at the end of the day, so you gotta fact check them, but I was asking earlier if we'd see it go to 265. I must have missed that. I know there was a bunch of people that were trying to go long on it last week, and it was hung up against all the sold calls. But it looks like some of those sold calls capitulated today. There was a lot of sold calls at 55. There's a lot at 60 too, so it may not go much higher, but they got a little bounce. So these ascending wedges tend to not be very bullish, but we'll see. How about some 45.95p for Monday? We can resume the pumpies now. JPL still has another speech today. He's not done running his mouth. I tried to buy a spy pet on my phone, and it's a no-go, I guess. It just won't work today. Yeah, I don't know. Fidelity's had a lot of problems recently. I haven't been a big fan. Yeah, you can talk about how the Fed has a dual mandate again and reveal no new information. Fidelity didn't get margin called. I know Fidelity is down. I don't really need it today for anything, but I know it's down. Does anybody know with TDA, if you open a day trade and it expires profitably in the money, if it's on a cash settled instrument, then no, it doesn't count as a day trade. If it's not on a cash settled instrument and you let it expire, you're just going to lose your money. Active Trader Pro is still working for me. Could be regional. My Jan 2025 puts will love the moment when CPI or PCE is ticking up again and everybody starts panicking. Alright. Can we have some long pickles picks that beat treasuries? Maybe. I already did uranium. I'm not going to do it again because people missed the boat. That's an Apple play now that we're over risk. Average down, cut. It's got 2 weeks. It's not substantially over risk. It's just a little bit. I'm not particularly worried about it. Over risk is where I was selling credit spreads, so I might sell some more credit spreads, but I've got 2 weeks on them, so I'm not in a big rush to get out of them. This is the top in, and we have another Head and Shoulders. Possibly. This has been a little bit distributive. But we'll see how it shakes out. I still have to lose like 90 for any like significant downside move. 90 and 75 are going to be our downside resistances. Some flows are turning around here, but they haven't reverted yet. Yeah, this could still be a little while before it breaks down. Maybe like an hour or so. Or they'll try to hold 90 until the Powell speech. Most user-friendly brokerage that actually functions reliably. User-friendly? Like easy to pick up? I don't think TDA and IBK are all that easy to pick up. They take a little bit of practice to learn the ins and outs of. Tasty Trade and WeBull are pretty easy with the UI. Oh, there was another one that I kind of liked, but I can't remember the name of it. IBKR is probably the best trading brokerage, but it's going to take a little practice to get used to it. $45.90. Yeah, $45.90. By user friendly, do you mean lose money on them easily? I don't know how anybody lost money today. All we did was go up. It's like the fucking market moved in one direction. So my TQQQ put in case the market crashes. I like eToro for its tight spreads. Arguably, Fidelity has the... I mean, Schwab's just TDA now. They're fine. They're not my favorite, but I have an account there. What broker is best for day trading, scalping, intraday, straddles, spreads? All of the ones I just mentioned are fine. WeBull's got kind of that cool feature where you can move your limits with your with just mouse clicks, which is cool. Jesus fuck, 500 internal server error. Call them and get your money back. You're gonna have to present a case for why you would have sold the top, but I'm not kidding. Did you have a stop set on it, like a trail stop or something? No, I would have bought a put here. It's not gonna... I don't know, I got my money back from Fidelity one time because I told him MACD crossed. Usually they'll just give you a bunch of free trades to shut you up. But that can be worth it over time. If you go through the hassle of customizing your ATP setup, Fidelity can... my problem with Fidelity is it's kind of slow to enter and exit positions. Always has been. Even if you do go through the trouble of setting up ATP. And that can lead to a lot of slippage over time. Especially if you're doing something like scalping. IBKR, you can program you can program like custom stops and all kinds of shit. Custom with a K. Can you make the SCX lose the 4590 level, please? K, and thanks. I think it's gonna do that all on its own, Popcorn. Careful if you program your own actions. Yeah, I mean, test it, but... I have a couple, like, custom, like... Yeah, I don't really know what to call them. They're not algos, but my buddy built them for me. But the problem is like he's kind of fucked off and he does something different now. And IBKR is updated like 10 times at least since he built them, so they're kind of falling apart. Yeah, I would say they're like macros. They're like volumetric stops instead of price-based stops. So like I can like set them at resistance, and if volume picks up, the stop will pull back, and if volume drops, the stop will tighten, or vice versa, sorry. Volume drops, stop pulls back. Volume picks up, stop tightens. It doesn't need to be very advanced. I could probably tinker with it myself. But what you have to do is you have to dive into IBKR's actual shit show of a coding base, and it's a nightmare. If GME has another run at GM today as a rug pull after almost certain. Tips just crossed today, and I would say that GME still looks pretty bullish. It is possible we don't see a run till Monday. Monday is still T+2. So I was thinking about maybe picking up some exposure on GME at like 16 for Monday, maybe like next Friday's expiration. They're a little fucking pricey though. Ooh, big oil short. Just now? Ooh, fuck. Damn, that's rough. What came out? Fed fund futures priced in sub 4% Fed policy rate by 2024 year end. Dude, is the dot plot gonna blow up the market? OPEC cut production. I don't know why oil's getting shorted so hard. It's gonna squeeze the shorts. He's doing another sit down, but this time with also with Governor Cook, I think. Who's in charge of Fed fund futures? Speculators, right? Mostly. Yeah. Why are VIX and SPX the same chart? They're similar. I think Fidelity back up on ATP. Okay. I tried to tell you this morning about double JPO. I didn't know what you were talking about, but I found it. I asked you too. I was like, what do you mean double JPO? And then you never responded. The price to re-enter bear call spreads on Apple. Mine got stopped out yesterday for a slight profit. But I'm thinking of moving the strikes higher, 92.95 for December 15th. Could be, yeah. As long as you don't think Apple's going to go up more. I might sell some 92.95s. If they're worth it. I really don't like getting less than 50% return on risk on those, though. I'm sorry not getting affected by SPX. Are they still covering on it? Yeah. Yeah, there's still some covering going on. Incremental, kind of slow, but it's there. Actually, let me pull this up because that fucking got deleted too. God damn it. Yeah, still some covering going on there. It's above gamma max though, so be careful. Price do you think JPY shorts would start getting squeezed? I think, I mean, they already should be. Just not aggressively, right? Probably quite a bit at 145, 138. Dollar fell back under resistance. Yields are rocketing down. We got a fucking treasury short squeeze out of this shit. Cause that'd be cool as hell. I know like 40% of the treasury short position's been pulled back, but there's still a lot short there. My girlfriend is a 24-year-old employee with a credit card at 120% interest rate? What? That can't be real. That's like a payday loan. Is Jimmy likely to start moving into the end of day since it's stable over 15? It might. I mean, I don't know. It really, I think, might depend on like index liquidity a bit. How good, not good does TUP look right now? It looks kind of good over a few days, but not particularly great today. Like, they could still, they might run out of short liquidity today. They got very, very little free liquidity this morning. And IWM running really isn't helping them. But it could still be like a day or two. Like on the longer time frame, we have pretty rapid contraction. And it's picking up pace, which is a good sign. Although historically it can kind of just pop off. However, if we go down to a smaller time frame and we look at just today, like yesterday they had quite a lot of liquidity, but today very, very little. Fortunately, they're staving off like the volumetric demand, but if we get closer to $2, the market maker is going to start demanding, you know, a hedge, right? For all those $2 calls. And if they do, this could move much faster into the end of the day. So it really depends on our positioning and distance from $2. But they're not going to dig up a lot more liquidity there. The float's tiny. They're going to have to cover something. Borrow rate on what? Jamie borrow rate at 10%. They can keep pushing that borrow rate up. There's plenty of shares available to borrow. Yeah, it's a bit tricky. I mean, even for programmers, it's got a lot of bugs. There's a lot of old shit that's never been fixed. So it's kind of quirky and you got to get used to it, but if you're a programmer, it's probably not as bad. But DRS, yeah, I mean, still, I mean, first of all, they've been covering liquidity on ETFs, right? So they have all of that liquidity should they choose to use it. They just don't want to use it before earnings, right? You want to use your ETF liquidity to short the top, not the mid range. Fucker stopped me out on the bull trap, and now I'm just sitting here. Fair. Oh, okay. I think I see where you got stopped. That's stinky. That's stinky butthole dork. But we did lose 45.90. How's it looking? How's That's fucking super stinky. Alright, that looks pretty sweet. Why? Should I buy more 45.50s? Just set a trail, right? Just set a trail stop at like $1 or something, and then you don't have to worry about it. Or $2. Fidelity's back up for a few people, down for some others. What are implications of Treasury short squeeze? Yields plummet, money flees equities rapidly to try not to miss the boat. Sorry if you answered. I walked away for a second. Well, first of all, you can end up with like a liquidity crunch. But yeah, everyone would you would get one asset risking off to risk on the other. Because bond prices are would rocket, right? Wasn't PacWest Bank trading? Didn't they go under? Bond market keeps doing JPow's job for him. I think JPow's aware of that. Dipped a little bit below ES 4600 here. I would argue the resistance has been lost. Girk's best friend and biggest fan. Hey, can you do me a favor and say everything will be alright and Tuple squeeze to $10 and I'll not be poor anymore and my wife will come back and I'll live a life of fun and happiness? Ha! Got you to say it by reading it. Get wrecked, nerd. Alright, man. I think the inverse head and shoulder on gold leads to 2,500. Maybe. Yeah, gold's going nuts. You guys really need to pay more attention to the things I say. Like this. For anybody that's wondering, gold was 1930 at the time. I pay for Pigeon Whale. Is that not paying attention? I don't get it. I've been listening to your announcement song on repeat. Was that not enough warning? most of my financial decisions on what some rando says in internet forums. Gold's about to break an all-time high. Fuck Fidelity. F this piece of shit market. Fucking chat. F, 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 F. I'm sorry that Fidelity's being a dirty piece of shit. I don't pay attention unless you climb up your pedal stool and yell down at us about what is over the horizon. I've been going on about going long gold since like August. Leaps were in Pickles picks. Back when it fucking dumped at like, I think it was both in March and maybe like in September. That was a borderline name and shame. I feel microaggressed. I'm sorry that oil's falling through the floor, Duxton, but international recessions tend to do that. I have excess P puts. If they won't let me close, I hope they cash settle it. If it expires today, it will, if it's in the money. Do none of you Fidelity people have active trader? I think some people do. Can we see 45.75? Dude, if we lose 45.75, we could see 45.50. Restart my computer. It works better. They changed how ordering via clicking the options chain worked. Maybe it's causing issues. Maybe. Costco started selling gold bars, then it rockets a few weeks later. Coincidence? I think not. Costco's about to wish they didn't sell any of those gold bars. They were selling them at like, what was it, like 1800 or something? Don't give him your login, Jen. You should take all your picks and trading news and put it together in an app. Like Bloomberg, but better. I like dropping hints. If people don't pay attention to them, it's not my fault. Most people in finance won't talk directly about their positioning very much. And so there's a part of me that's like still used to that, right? Where you can like you can talk about things tangentially, but you try not to directly discuss them. Like, if you ever expect me to be like, "Hey guys, you should really totally buy calls on this or that," no. But if I'm like, wow, gold looks really cheap and the currency situation is highly uncertain, maybe you should do some research on gold and the currency situation. Get over yourself. I can't. There's just more of me there when I do. I put on a lot of that weight from the pandemic, but You don't have any Bobby Q shares. They were destroyed. The Costco bars were like 1930 and future trading sub 1850. Oh, gross. I'll be happy to tell you about my trades. They're underwater. Is it your 4550 butterfly that expires this week? You didn't like 400% returns on it, so you decided to hold through the end? I would never tell anybody when to buy and sell. I'm not Jim Cramer. And what and how much? To do that, I would have to truly believe that my analysis was completely infallible. And while it's real good, I don't think it's completely infallible. Is crossover talk one of those subtle hints? No, it's just something me and Dork celebrate, that's all. Thank you, Gherk. Thank you, chat. Thank you, JFresh and Dork. You've all become a weird backdrop for my days, and I wouldn't trade it for an out-of-the-money call. That's the most beautiful thing anybody could have said. Thanks, DraxX, and happy birthday. Gold is a shitcoin. Well, some places. If my port was your port, would you buy these 4585p 0 DTEs and diamond hand them into close because we're closing at 4550? We're not necessarily closing at 4550. We could very easily just close at 4575. Or JPOW could say something insanely hawkish in the next 2 hours. He starts speaking at 2. Sorry, I don't understand the words you said. The smugness in your voice was too overpowering. Perfect. I thought we always closed at 4550 now. That's something that's happened a bunch. Grim2 buttering him up to ask for the shirt removal again. He already did like 3 times today. What's your near-term price target for... I don't have a price target for gold. Up? Up's a good target on it. It's pretty close to all-time highs. Who the fuck knows where it's gonna go. Wait, did you really mean full port into UVXY when you said stay away from it? Inverse hint? No. I said that there's lots of other ways to get exposure to vol that aren't at risk of blowing up. What's JPOW talking? He's doing a roundtable with Governor Cook at the same university. Also, that didn't send from my phone, so maybe that happened this morning. Puts on Google. But they... Wait, has anybody been getting ads today? Or have they been busy crashing Fidelity so they couldn't play ads for everyone? No, VXX sucks too. Tons, some, lots of ads, multiple ads, got a couple, yes to ads, only one, tons of ads, no ads, because I have an ad blocker. Let's just see some B-list Fed employees on the stream. Do you think we can get anyone from Cleveland or Richmond to come on? No, they're busy dealing with their contracting economies. Leg down incoming? Possibly, yeah, if we don't regain 4590 here. This could slip more. Starting to get a little bit of put interest coming in. Flows are pulling back. Sharply. Lots of call selling. What about Palantir? I already rolled my position out. I just wanted to go back below fucking 20. Or 1950. Two Manscaped, one Fubo. You sure you aren't sponsored? Yeah. That'd be cool though. I could be sponsored by things, but I don't answer the emails that they send me. I get all kinds of shit. There's always, like, eToro and Moo are always trying to get me to hype their brokerage platforms. They've offered me some pretty decent money before, but both of their brokerages suck balls. Pretty sure Cosmic Lightning Warrior works for the Fed. No, I didn't roll him to Jan. I just rolled him to next week. David Duarte, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream.
Happy birthday, Gherkin.
Raid Shadow Legends. Let me do it.
Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gherkin the go. Hoping that you read the DD, cause when the shit squeeze, we gon' end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon,
I think it's called
Praise be to RC and the BY, please, cause I need G and me to moon soon, man. Got the band GG on the CNBC saying that he ain't seeing no collusion. And we might
be sponsored, to be honest about other platforms. Silent on theirs. I watched these NVIDIA pumpers reposition a large block of calls twice. Their 460Cs are losing value fast, and these morons still won't take a profit. It's probably like Wall Street bets. Pi-Fi would only sell out for a Profit Tech sponsorship. That'd be fucking awesome. We'll just pause trading one day and start doing reviews on espresso gear. I wish I could join the group, but I'm not allowed on the Discord anymore. Good news, someone sent me to you all, and I've learned so much. I feel like there's a bigger story there, but I'm glad you're learning, man. That's awesome. Not gonna lie, I'd watch that. I wouldn't even blink an eye. That would be regular content at this point. Are you a Mystery Science fan? I used to like it when I was younger. I haven't seen it in years. Decade? Probably longer than a decade. I can't believe GameStop hasn't offered you anything at this. I wouldn't shill for them. Gross. I'd shill Citadel before I shilled GameStop. When's Citadel gonna open a brokerage? Do you track Greeks on Fixie at all? We might. I'm not sure. Nope. But we could. Given your public comments about RC, I'm surprised people think they'd want to work with you. If you can't take criticism, you probably shouldn't be running a company. At least to talk to you about almost anything, but ironically, shilling GameStop, the thing that got me here would be too much. Nope, Cohen's never slipped in my DMs. He's probably never slipped in anybody's DMs. Because he probably doesn't even run his own fucking Twitter account. $500+ call volume on call strikes that have 25 to 50 volume max per day last 2 weeks. Unsure if short calls are long. Probably long. There's probably a lot of people going long yen right now. It's a good hedge. Huh. Okay, we could talk. We could talk about that. That's really interesting. Hmm. They're losing it slowly. Yeah, they are. This call side outflow looks really rough. Like, there's still support at 75, but holding 80, 85 is going to be tough here. What we're not seeing though, Dork, is a increase in put delta to the downside. We're not seeing puts sold, but we're not really seeing them bought either. At least not heavily. God, if I had like $2 billion, I would just, every time something like this happens, I would just buy like, I would full port at the money puts. Like if someone with a few hundred million came in right now and went short like the 80, 85, 80, 75, they could drop this to 45, 85 like that. Hey, my port just got a call out. Do you hate America? Pull up JBow. Oh, is he talking now? I don't think it's started yet. Maybe I just have the wrong. Hold on. Yeah, I don't think it hasn't started yet. Pretty consistent call capitulation, just no put buying. Yeah, sorry. Upstart's testing resistance right now, like technical resistance on the upside right now. It's broken out a trend. If it breaks 3175, the next stop is like, well, on the technical side, the next stop is 34. I don't really know if there's enough options up there, but maybe the squeeze can push it. You're still thirsting after the chick from IMF? No, still nothing. Jayhawk or J-Dove? Blue Jay. GME's getting kind of close to running out of liquidity. Taking a while today, though. Upstart's completely out of liquidity. Fucking Macy's, man. It just won't stop. Macy's is back to $17. Ooh, they're starting to cover on top a little bit. We're seeing volume pick up? Not yet. Getting there. I think Fubo might almost be out of liquidity too. Intraday liquidity. Nah, maybe not. Yeah, maybe it is. Russell's really not pulling back. It should still be pressuring these. They gotta start covering the underlying. How many times do bulls have to get kicked in the nuts? Always one more. I really regret not picking up M when it was cheap. That was a good buy. Give me 1 second. little bit more call buying. Not much. Most of it seems to be around 45.90. This should be audio. I'm playing the audio. I don't know how you can not hear this and you hear me. Same volume. It's out of phase. Sounds fine to me. Tinny? Hmm. I don't know what the fuck you guys are talking about. It sounds fine to me. Like they're in an open room and it doesn't sound amazing, but it doesn't sound that bad. Sounds fine to me. Fine for me. Maybe if you're having audio problems, just try refreshing the chat or the stream. It might be like the double audio stream putting more demand on like YouTube's intake. What are options doing? Well, we were getting a little bit of a call accumulation, and that looks like it's falling off now. But we're still seeing some put selling. So more just like slow distribution on profit taking, but no big shifts. Or at least I'm not seeing any. Are you? Are you? Try refreshing the stream if you don't hear them. No. Huh. That's weird. Yes, going to test 4,600 off a bear flag isn't exactly bullish. I'm gonna go check out my food. I'll be right back. I will say that carbon nanotube research has yielded nothing, despite the insane amount of money pumped into it. Where's JFresh? Are they still selling puts or anything building interesting below us? I don't see a lot of movement outside of the 90 calls. It actually looks like someone's buying some puts right now. The market maker had just still about 500,000 delta from neutral though, so nothing quite bearish yet. Have you guys gone and tried to get a loan from Jensen for a cloud infrastructure company? Stop making nanotubes, get into AI. It's me. I'm buying puts. You picked up 100K in put delta in the last 15 minutes? It's impressive. They're slamming the VIX. Yeah, a little bit. But right now, slamming the VIX means they're pushing the long puts, so risky. Yeah, I might consider some of the like JEPI or like QILD or Yield Max shit if there's a pullback, but not without one. They don't work taking off Friday. I wonder why no one's really talking about the decrease in venture capital available for like startups with high ESG scores, because it's been a big thing. Like the money that was getting thrown at like socially conscious, environmentally conscious corporations just dried right up. It's called Larry Pulled Out, Dad. I mean, they have some growth potential, AJ, because their ownership is like largely blue chips. But yeah, they're generally considered like an income thing for retired people. Well, it's not just the effect is far larger than just wokeism. Well, the impact of shifting VC funding like that isn't just about ESG, right? ESG became a thing that all startups had to target and address, right? It doesn't matter what your corporate goal was, you had to focus on ESG, right? And by venture capitalists switching course and moving into like AI, like efficient AI and tech startups, they fuck up the entire business cycle of all of these companies that were coming to market. whether ESG was a joke or not, it forced those companies to build in that direction, right? And now they're losing market share to companies that are less developed and probably riskier overall investments. Hmm. No, I don't. I don't agree. You're actually wrong, Sisyphus. You're talking about companies that are coming out of incubator in like a 3-year build-up cycle, 3 to 5 years, and they've focused a huge amount of capital on ESG that just got rug pulled out from under them. Right? These are like viable, fleshed out companies, and they're losing market share to companies that are still really early in their development cycle. So what's actually happening um, is that VCs are taking on an insane amount of risk in order to pivot to a higher efficiency model, right? As opposed to picking up these more mature companies. So it's a big problem. That's a lot of private wealth that flows into VC funding. So dumb, Gork. What? Mm, it's not really bearish or bullish yet. No, newer, smaller companies flowing in and getting the majority share of VC funding is bad. They'll be more highly competitive, right? And the companies that survive will probably be better, but there'll be fewer of them. And then also the initial rounds of funding that went to those ESG focused companies is just blown up, right? That money's lost. And they're investing money in like bullshit AI startups, right? For the most part. Ah, Isn't that how a bubble forms? That's, yeah. We'll probably speak at the end. I have it turned all the way up. I can hear they're fucking with you. That's what I thought. What is seemingly driving price action right now? Any chance of down, or is the last gap up the final nail? We'll see. There's not a lot of sustainable liquidity at these levels yet. But if we trade here for long enough, it could build. I would say we're mostly chopping, despite the range of the move from like 85 to 95. This is still relatively range bound. I don't think positioning has changed much. We saw, a pretty strong mix of call buying and put buying through here. Call buying kind of got an edge here, but volume overall is pretty low. JFresh be right about what? Oh, I don't give a shit about that. Lighting in the room. Oh yeah, it's because of there's natural light. Cameras don't like that. Why are you so angry about the batteries, Daniel Supreme? Is it because he's not buying them at GameStop? I don't think I own anything that I could put a battery in. You can buy like new batteries at GameStop for 95% the cost of new. Yeah, but there's no batteries. It's like a sealed battery. It doesn't have. I can't put like a double A in it. I traded 50,000 batteries for a copy of Nick Cage's hit series Ambulance, seasons 1 and 2, on Blu ray. DVD. You're gonna miss out on all the commentary. There's your red candle, Dork. Are you happy? My favorite bespoke rechargeable batteries are the ones on my $200 walkie-talkies that are obviously 3 rechargeable Amazon Choice AAAs electrically taped together that require a $50 charger. What the fuck do you need a walkie-talkie for? Are you like a volunteer police officer on the weekends in New Jersey? Yeah, Upstart had a good day today. Don't act like you and Dork don't build a fort in your rooms at night and walkie-talkie each other. No, we just get on Discord and lay in bed and talk about what we're wearing. It's not weird. We definitely don't touch ourselves. That's one of the rules, even. She said AI SPX to 5,000. JPEG's drawing pickles. He keeps like every time they pan to him, he like looks up and he's like pretending like he's paying attention. It's not a good look. I escape it all at least once a year by disappearing in the mountains. Long range walkies have saved me more than once. I tend to wander into nothingness looking for hidden kavas under BTC ATMs. Have you ever considered not doing that? Or alternatively, getting a satellite phone? Looks like a bored kid waiting for adults to stop talking so he can go play Nintendo. There's an AI that identifies when he's on camera and gives him a gentle electric buzz to remind him not to look dead inside. Oh god, they're teaching students useless shit. If I get a satellite phone, the man will know where I am. Stop shilling for AT&T. Listen, man, my yield on cost is insane. Oh, so you can teach people things that are wrong? Fucking... God damn it. There's gonna be nothing quite like a generation of academics learning the maybe best answer instead of the right answer. Did he even say anything? Well, a little bit at the end, but not much. OI looks exactly the fucking same. You guys can ask me 100 times, it's not gonna change it. Right now, the concentration of zero DTE interest would indicate a close somewhere between 45.90 and 4600. On the longer dated chain, shockingly, not a lot has changed. I guess there's a little less defensive positioning around 25. And sub 45.50. So that's broken down a bit with profit taking. I think we've seen longer dated calls kind of fall off all over in the money. 75 is still the focal point for interest to the downside. 4600 is the focal point of interest for the upside. Tomorrow's expiration does have some call side, or Monday's expiration does have some call side interest, which is loosely defended at 75. But those calls could just as easily be sold, and probably are, given their expiry, right? Like they're like sold and like buy them back Monday morning. No serious put interest till you get down to around 45.55, but there is a bit of a concentration building at 65, 60, 55. And a loss of the 90 level could drag us back down, but we've yet to substantially slip from this price level. So I don't think holding here into the end of day is unreasonable, but the failure to gain 4600 and hold 4600 is a big miss. And liquidity is definitely a problem for the bulls on the upside, which we knew going into this. As far as squeezing out 4600 calls, it doesn't appear that that was a successful endeavor. They're not really moving things up, right? We're in the upper part of a range that already existed, but we haven't broken into a new range in order to find stability. And without breaching 4600 and holding above 4600, their positioning is just as weak as it's been all week, right? And so their Vega risk is still very pronounced. OI doesn't need to change for me to see where positions are moving. Well, I don't need the OI update to see them. I can see them better after an OI update. I think I see a bear in the woods. Well, Dork, if no one else sees it, how do we know it's real? Did it shit? It did? It's shitting? Oh, okay. Never mind. It's clearly real. No, I cut that shit when the index started to tank, Harry. But nice. Congratulations. I was perfectly happy with 100%. Do you think we break down to 45.75? I mean, that could depend on a lot. There's some put buying going on right now, or at least short put closing. That could affect things. It may not, but it could. We've still got about 40 minutes. I sold half before you were out. It was a good one. Can anyone else move money on Fidelity? Fidelity's like fucked up today. I'm pretty sure bears are endangered. I'm pretty sure you're being hyperbolic. I mean, even our high today was only $12 higher than our prior high. It's not really that big of a change. I meant literally, like endangered. Are the polar bears might be, but not the rest of them. Like polar. Okay. I didn't realize we were getting into that. I don't think grizzlies are endangered. They're fucking like everywhere in Alaska, right? And Canada. Where they live. Russia. Or I don't know what kind of bear they have in Russia, but it's brown also. Eurasian brown bear or some shit, probably. I think the bears will be okay. Even the endangered ones. I mean, ultimately, J-Pow didn't say anything today about economic policy, and that means they're gonna just read harder into the things he did say, which were kind of hawkish. He said we're still really far from our goal on, you know, getting inflation down, even though inflation is moving down, right? And then what was his other comment? He had like 3 kind of hawkish comments and like one. What do you say? They think GDP is slowing. Credit card use and defaults may be slowing, which is a mixed statement. He said there's a path to getting inflation down to 2% without large job loss, and he thinks they're on that path. He said the data will tell if they've done enough or they need to do more. And he said inflation is still well above target, but moving in the right direction. Which, I mean, that's also a nothing statement. Your meme was spot on. Yeah, he's just not gonna do anything. Just hold it till it breaks. The market can speculate and believe whatever they want, but they're just gonna find themselves fighting the Fed. He's not cutting. There is 0 reason to cut rates. We don't need more economic expansion. We have expansion already significantly above the target growth rate. Why would you cut rates? If we can hold a 5% interest rate, and maintain 5% growth a quarter, we're killing it, right? Best economy in the world. The only people calling for rate cuts are the ones that know that that isn't sustainable. He said we were at 3, which was incorrect. We're at 3.2, but if he cuts rates, he'll cut it because we're having a credit crisis. If he cuts rates, we'll have a credit crisis. I mean, it goes both ways, right? Japan raises, US cuts, carry trade gets squeezed, right? Dollar gets slammed. Treasury demand dries up at a point when we're issuing debt like nobody's business. Doesn't the higher rate make it harder to pay down our debt? It makes it more expensive to carry our debt. But that has nothing to do with the Federal Reserve. That's the responsibility. I mean, he's already said 50 times and no one listens to him. The current path of fiscal policy is unsustainable, right? They don't even put it in the news, but he says it every fucking time. He's like, you think he's gonna let Yellen win? No, the current path of fiscal policy is unsustainable for everybody, not just the consumer. Is this a triple top? Not really, but a little bit. It's just chop, right? Not everything is technically defined on the 1 minute. Broadly, we're in a slight uptrend. Very slight. Locally, we're just chopping. That's another $30 end of day move. It doesn't really look possible right now, but that's... I mean, I guess if there was like a lot of call capitulation. They might try to squeeze the 4,600 into the end of the day. About 30 minutes. Calls are getting pretty cheap. Yeah, I could see him take a stab at it. Yeah, still seems kind of unwilling to break much higher. Double top? Yeah, I don't think I'm gonna fuck with it. Maybe in like 15 minutes, but not yet. Like, there's a chance we bump up to 4,600, but then everything might sell off if we do. I'd be happy with a $10 pullback. If we pull back, I think it's to 45.75. And I think the concentration of interest at the money is too high for that right now. As a matter of fact, a test of 4,600 or close to 4,600 and a rejection right now would arguably be more bearish than us just continuing to chop right here. Yields got boofed hard as fuck today. Yeah. I think Fed Fund Futures is pricing 4 rate cuts into 2024 now. I think the biggest problem with all this like early speculation on the Fed cutting rates is the dot plot could easily upset it. The dot plot's going to be based on 3 very bad months of increasing inflation due to energy costs. The December meeting. So like 2 weeks. What's your end of year price prediction? I don't have an end of year price prediction for Fubo. What the fuck is that? I'm not like a JPM analyst. It could be worth between $6 and $13 by the end of 2025. Provided they stay on track with their current plan. Nice estimated profit. Well done, man. I think this holds up over the weekend and they want to push it higher. It seems like there's just no bullishness over 4,600. There's no options. That's the problem, is all the calls on the chain are already in the money for the most part. If you're a JPM analyst, you'd say your end of year price target was 20, then buy a shitload of calls on it. Can you do some distribution TA on the NVIDIA chart? Yeah, we could take a look. Yeah, this is unquestionably distributive. Phase though? So if this is the spring, then you'd be looking here for the breakdown at 45.55. The problem is, so that like that buying climax through like failed rally into breakdown, that can like that cycle can repeat, right? So like we've got phase C, I would say. Right, like this is phase C. But then, entering phase D, it could bounce, like you can get another spring, right? They don't always, I mean, like, so sometimes the cycles can repeat themselves, but if we did start to get the breakdown, then yeah, that would be phase D. I was just fucking with you, Andrew. I mean, I feel like I've written a lot of DD on where I expect Fubo to be in like a few years, but they have their own goal, right? Their goal is to be a positive EBITDA by the end of 2025, and if they pull it off, their executives all get a bunch of bonuses. So they're working really hard towards that goal. It's pretty heavily incentivized for the board or for the C-suite. So that's kind of my target valuation at positive EBITDA, and I think a fair valuation, barring multiples, would be between like $8 and $13 at that point, which would be a 4 to 6x return on my initial investment, plus the volatility and the premiums picked up along the way, which have been quite good actually. Sorry about that. Get back here. What happened to your VIX Volmageddon chart correlation? You mean like VVIX and VIX? I don't really need to look at that every day. But what about it? VIX is super low, SPX is super high, so they're going to be very diverged. You're looking at something similar with like core 3 month skew as well. That's not too different. That just tells you more about the pricing, but it's still showing you the same tail risk effect. So Upstart have more range over the next 2 weeks. Well, right now it's above Gamma Max, so presumably no. I do think, however, that there is more that can be, quite a lot more that can be covered on Upstart in terms of like unrealized liquidity. So, possible? Pete and Repeat were on a boat. Pete fell out. Who was left? Repeat. Can I ask a question I think you'll hate? Would you take profit on 10-year bonds that are up about 5%? Absolutely fucking not. But you can if you want to. I had a 25-minute interview for a senior engineer lead position with them yesterday. Just got a job offer today. They clearly can't judge talent. Congrats, Paris. But would you take profit on 10-year bonds that were up 5.99%? No. How do I get my tip touched? Have you tried, like, your local penny saver? Cool. Any specific reason, or just play the playthrough as intended? Well, you've got 10 years. I do feel that rates would come down meaningfully in a 10-year time span. 10 years is decent theta, right? I'm not asking my grandma to touch my tip, nor Ben Franklin either. But this may have already been the T2 on Upstart. It may not be, but I'm not gonna re-enter right here. Do you think IWM would range almost 300 BPS today? No, but I'm not particularly surprised. As we just continue to drift, grind up, or stay around this level, if no one's that bearish until next year, it's not really so much about the bears as is that the call side needs the long side needs the liquidity. They need the break. There don't have to be any bears. There just has to be profit taking on in the money calls where most of the calls are. And even with like the in the money calls falling off, we're not seeing the same reaccumulation of out of the money calls. Even with yields shit and where they are, they're still better than inflation, like the inflation adjusted forward earnings on the S&P, right? So there's still no risk premium on buying equities, which doesn't make equities a very attractive investment. And money market funds are continuing to experience large inflows. So we're not seeing like consumers diving into the equity market either. No one wanted to buy this shit in fucking July when it was up here. No, definitely nobody wants to buy it now up here. Yeah, they can keep using derivatives. But we also know how that turns out, right? They build up enough Vega risk and some of it starts to be realized. And then we blow out 10% of the downside like we did over the last 3 months. Except every time there's more and more Vega risk. Yeah, it might be frustrating, but it is what it is, right? You can't hold an expectation for the market to behave rationally. Or even within the confines of reason. That's fine. I'd say given the fairly low volume into the end of the day here on ES, we're likely just seeing the effects of hedging. I don't think we're seeing like a ton of buying on ES. We saw a lot of buying on ES earlier today, briefly. And that faded out really quickly. We saw a lot of buying on ES into the end of day yesterday. Like bulls bought themselves some padding from the Vega risk, but it's still right there. Risk doesn't go away just because you short it. You still buying Jimmy calls for Monday? Today? No, I'll probably just wait till Monday morning. I can't think of a good reason to pick them up today. It doesn't look like they could get to 4,600. I wouldn't underestimate them. But yes, it looks difficult. A close under 45.90 would be pretty bad. And it looks like we're seeing a lot of put interest pick up into the weekend. Because these are not short calls closing. I thought Fidelity banned me from options, but I just put a trade through for Jan calls on VIX. I wouldn't buy VIX calls. They're mispriced. But congratulations on beating the system. Yeah, at the money delta on VIX calls for Jan. Is 0.82. So you're paying for quite a lot of intrinsic value buying those. That intrinsic value that is unrealized. There's some argument probably for selling VIX, but I don't think there's a very strong one for buying it. I'd be selling the fuck out of those VIX calls if I was a clown. Hey man, I sold some VIX calls that expired on Wednesday. I gave myself some room, but it wasn't so bad. I think what's more important here is that GME is holding on to 15. So, Dork, who's calling market crash Monday for next week? 9 minutes to tank 50 bips. Let's ride. I don't think so. Book of MOASS. Yeah. It did go up 3 cents in one candle. We can't crash yet. It's not post OPEX. Smart. Wait, Jimmy went up 20% and no one in chat gifted subs. So no one played FDs. I don't think anybody gifted subs today. I did. I played 0 GTs. Don't call them FDs. Grow up. Do you think we'll keep these levels or higher until the 15th? If we don't get higher, it's going to be hard to keep these levels that long. Short vol has diminishing returns, which nobody seems to listen to when I say it. Shorting vol when VIX was at 22 was awesome. Shorting vol when VIX is at 12.63 is shit. So you have to short 5 times the amount of vol for the same effect. Well, that's what compounds the risk. I'm on a margin account on IBKR. I tried to buy top. I have $400 left. I tried to buy 200 and it gives me a notice. Is this the maintenance cost? Maybe, or it's not marginable security. Which would not surprise me. New York City to establish $15 toll to enter central Manhattan. I doubt it. People will break them. Are we still wasting time explaining the market mechanics around diminishing return risk for short sellers and long positive position? What is this? Feb 2021? I have to explain it every week, Gaff. It's like Groundhog's Day. but less funny. I've noticed the biggest problem with retail investors broadly. I'll say that it's a bit better here, but let me try to distill this into one sentence. Green candle equals up forever. And it dawns on me, after all these years, that this is why institutional investors consider retail dumb money. Because they just buy shit when they don't think about it. I heard there's no such thing as risk. Shut up. It doesn't work on VIX. Like, you can just say a couple good things about any pile of shit, and people are like, let me get some of that. It's shocking. Like, the readiness, right? And you know what really turned it around for me? It was watching our short squeeze buy almost bankrupt, illiquid, like, medical device companies that were run out of like a strip mall in New Jersey at $1.80 a share into a share offering. And I was like, oh, that. The nerve of those people. If I don't take on way too much risk, then I risk missing out on Fed intervention. So you're trying to make yourself too big to fail? Interesting. I've never thought about it that way. So by becoming a parasite on something that's too big to fail, you yourself can survive anything. Why is vol going up? Shh. There wouldn't be a reason for that, right? I don't really think the narrative fell apart, but there was nothing to sustain it further. So the narrative's kind of hungry. No, there's no short calls getting squeezed out. Not right here. I'm eating myself towards too big to fail. And by failing, I mean failing to eat less cheese. No, vol up, VIX up is not, or SPX up, VIX up is not croissant guy's theory. It's just a market mechanic. Ding ding. Yeah, it was, well, we closed below 45.95, right, Popcorn? Did someone say VIX up, dicks up? Now that is an actual correlation. I just can't understand his emoji tweets. Don't worry, the more I listen to him, the less I think is actually in those tweets. All right, so we closed at the top of the bull confirm range, although we did briefly test the outer bounds of our total range. And the failure to break out here isn't really established yet, but we're not in the most bullish position. Like, this is not like a bull flag or anything. We may see this breakdown next week. We may not. It does appear that there's some 1 DTE calls sold to the upside, especially the upside of 46.05. And there is still some positioning in this range to hold us up. Next support to the downside is 45.75. Below that, support starts to fall apart now. We have slightly moved into a higher range, but we haven't really established a foothold above 4,600 yet. And so I would say that continuing to hold this range without failure is still tentative. GME continued to see a small amount of covering today, but not a lot. We did hold 15 into close. It does look like there's some effort to short into the end of the day. This could just as easily turn around next week as it could continue realizing covering. Remember that T+2 from the day before yesterday, or Wednesday, when we ran pretty hard, was not over until Monday morning. And so there may still be some leftover effects. Upstart is in fact starting to see more covering, unlike GME, which is nearing its limit. And blew substantially through Gamma Max today, which was at 29. For this to continue up, it'll either have to start squeezing out shorts, or it will have to see an influx of call interest. I will say that Fed Fund futures pricing in more rate cuts is inherently bullish for Upstart, and, you know, offers hope of credit market stability in the future, which Upstart very much needs to be profitable with its business model. So I would watch it very closely. I think there's some chance that if markets, like indexes, are able to hold their current position and no significant liquidity is provided by falling indexes, that there's a very good chance that this runs, and it may run hard again. So some exposure may not be a bad thing. Fubo kind of defeated into the end of the day, but there's really still no covering going on there. Yeah, I think it's still sufficiently liquid that they can kind of hold it around this price point. It seems like very little shorting is needed in order to maintain stability above $3, but it would need to be shorted significantly harder to get back below $3. Top almost ran out of liquidity into the end of the day today, and I guess we did see a little bit of price improvement at the end of the day on it. But it is still very, very heavily shorted. There is little to no covering that has occurred, and I would imagine that they're running out of room to play hot potato. As you can see, every time they kind of roll over that exposure, they're getting a little closer and closer to realization of that liquidity. And so, you know, this is probably going to break sooner rather than later, although it's hard to say exactly when. It may break Monday. I would say that one more good push up in the index might be enough to force it over the edge. And if it does go over the edge, it's significantly more illiquid than it was back here in October. And even more illiquid than it was back in July. So the range, well, it's probably really dependent on how many calls people buy, but I would say that it could really get moving. Again, very low liquidity, very low available ETF liquidity due to their near bankruptcy. So yeah, that might still have some potential. Broad commodities today, we saw a little bit of a bump. These seem to be kind of rounding off as they've broken down out of the more recent trend, but there's still some hope that the stimulus coming into China will, reignite manufacturing and pick up some commodities demand. So we'll see how that plays out. I mean, obviously they could fail again. I already went over TEP. But is TEP doing something like crazy in after hours? No. Okay. Where was I? Dixie down today, and yields way down today. Massive drop in yields. They're now roughly where they were. Oh, well, almost back to where they were in the middle of September. They haven't fallen that dramatically, but they have definitely come down from their peak quite a bit. Dollar has come down far more, I think, than yields have over the same period of time. Correlation on the 1 month started to turn back the other way today, but part of that probably has to do with us finding a slightly higher range and a little bit more of the breadth coming in on today's run as tech continues to underperform. And we are seeing like a distribute excuse me, a distributive effect across most of the tech sector. Like the Mag 7 are all looking very distributive. And so, we may still see a little bit of stability in correlation as maybe the dispersion trade shifts from its larger targets in the Mag 7 out to a wider scope, possibly in like industrials and manufacturing. And we may see market cap kind of move over that way as people seek out defensives in a contracting economy. The yield returns and volatility dropped again today, pretty obviously as yields rose. JPY carry trade lost 26% today. Bond volatility is back up, but it's not having as much of an effect on the correlation index as we were seeing before. So we probably want to see bond volatility rise a little bit higher in order to pull that up with it. Skew up and core up, which is generally speaking inverse what we would expect, but the cost of tail risk hedging and the odds of a tail risk event increased today by about 4% on the index. And well, I would say this increases the chance of like a 2 sigma move by about like 1 or 2%, and it increases the chance of a 3 sigma move by maybe like 0.1%. So not a huge move, but when skew gets into these upper bounds above like 32, the chance increases greatly. Lastly, I guess like VIX correlation still negative, although VVIX correlation is starting to fall off. So that's interesting. This may have peaked. So we might start to see a turnaround in volatility here. But right now, the VIX contract in front and VIX are very disparate. And lastly, S&P stocks over their 20-day moving average moved from 77% of the S&P to 84% of the S&P by the end of today. But we are starting to see a downtrend in that, and that may continue over the coming 2 weeks. I think that's about it. You want to see the heat map? Sure. Yeah, so not a lot of gains in big tech. Microsoft, Meta, Google all down today. Apple slightly up. Amazon up. So we see broadly finance doing well, consumer services, producer manufacturing, health services, process industries, transportation doing very well for a second day in a row. This is partially on hopes that the economy is going to reignite in some substantial way, which is fucking stupid. But energy and utilities still doing pretty well. And these are, you know, a lot of these are like communication, utilities, consumer durables doing well, except for Tesla. Commercial services doing well. These are, you know, fairly defensive sectors, right? And so it's interesting that we're seeing, you know, such massive outperformance here, and, you know, kind of underperformance in big mega cap tech. It's might be notable after about 2 days of it. It really might not. But yeah, lots of good healthy breadth in the market with, you know, underperformance in tech. However, remember that these tech companies, while they're distributing out and showing lower performance, represent 30% of the S&P 500 right now. So, something to consider. Anyway, thank you guys so much for tuning in. I will be around on Sunday for the members only stream at 12:30 p.m. Feel free to come and join us while we talk about JFresh's hot tub and some other things. Did I win? What? The prediction? I think you did. I think you won. What was your prediction? What was the other prediction? You didn't have predictions. You had one prediction. I don't remember. Okay, you probably did. Did you vote up? You voted up. I remember you were trying to inverse yourself. Anyway, I'll see you guys on Sunday. I hope everyone has a great weekend. Thank you for tuning in. Congratulations to all of you that did well running some of the meme stocks this week. That was pretty fun. And for those of you that did pretty good on the S&P as well. I know a lot of people seem to be pretty happy, and judging from the majority of people, I would say most people did pretty well. So well done. And I'll see you all Sunday. Have a good weekend, guys. Later.